Mr. Chair, you have a quorum.
Thank you, Mr. Chairman. I have Senate Bill 421. Mr. Chairman and members of the committee, Senate Bill 421, I would like you to know, is priority legislation for the Virginia Legislative Black Caucus. This legislation is comprehensive lending reform that targets predatory lending practices, but it will still ensure widespread access to affordable credit. We are addressing all of it: payday lending, title lending, online lending, consumer finance, and open credit loans. This bill has been brought forward because Virginia has some of the weakest laws in the country for payday and title loans. The same lenders are charging Virginians 3 times more than what they charge people in other states. This is unacceptable, and Virginia consumers deserve better. I have several speakers who would like to speak to this measure, and then I will come back and wrap up.
First in line.
Senator McClellan will speak, and then I'll
Okay.
have the AG come. And Sorrell.
Thank you, Mr. Chair. This is a bill that is an across-the-board reform so that we don't have to constantly play whack-a-mole on this issue as we have been over the past several years. Our goal is to finally close the loopholes, insert consumer protection guardrails, and ensure access to credit for all Virginians. We shouldn't have people who go and get loans to meet a short-term need and then end up with more debt than the original loan was for because of high interest rates and just a spiral of debt they can't get out of. We've tried several times to close these loopholes. Hopefully with this bill, we finally will do so. And now I'd like to turn it over to Attorney General Herring.
Sure.
Scott Serba.
Before we do that, Mr. Chairman, there is a substitute on this bill that addresses some of the concerns that were raised by the Bureau of Financial Institutions.
Oh, boy. How are we supposed to read this?
There's nothing that changes. It only addresses some concerns that were raised by the BFI.
Somebody want to explain what they were? Is there anybody here from the Bureau of Financial Institutions to explain what the changes are?
He went outside, but they basically were changes to address concerns they had over how to implement it and to make it easier for them to implement it. So,
Okay. Senator Norman.
yeah.
Mr. Chairman, I find that explanation unacceptable. You know, if you haven't, and I don't mean this derogatory, if you want to sit down, Tom, is that if you haven't been involved in the conversation, how are we supposed to know what the issues are that have been raised by them without an explanation? And I'd like for somebody from the Bureau of
I
Finance
think
to
they're going
address
to
it.
get him.
I'm sorry?
I think they were going to get him. I was trying to
Okay, that's
filibuster
great.
until
Thank
he
you
could
very
get here.
much.
Mr. Chairman, could we also roll my 2 bills in, Senate Bills 3738?
Okay, do I have a motion?
So move.
There's a motion and a second. I think this has to be recorded, doesn't it?
Yeah, recorded.
Yeah. So all those in favor of rolling Senate Bills 37 and 38 into Senate Bill 421, vote aye. Okay.
Thank you, Mr. Chairman.
Ayes 14-0.
Mr. Chairman, could I just say very briefly, I've carried legislation to try and deal with these issues now for about the last 4 or 5 sessions. I attended 3 work group meetings at the BFI trying to come up with solutions to many of these problems. One of the problems I've heard is that people are concerned about the availability of credit if we were to pass this law. And I've given staff a study from North Carolina, which I just wanted to give to everybody. You might have a chance to look at while we're talking. But in the early 2000s, the state of North Carolina adopted a 36% rate cap on payday lending. And in 2006, the University of North Carolina was asked to go back and look at that 36% cap to see what kind of effect it had, whether it had a negative effect. And in that study, which you have in front of you, if you look in the executive summary, the researchers went and talked to 500 former payday clients, and they said that the absence of storefront payday lending had no significant impact on the availability of credit for households in North Carolina. That was one finding. Number two, more than twice as many former payday borrowers reported the absence of payday lending had a positive rather than negative impact on their household. Thirdly, payday borrowers gave firsthand accounts of how payday loans were easy to get into but hard to get out of, and 9 out of 10 households thought predatory lending was a bad thing, those they spoke to. And I just want to hand that survey out to try and alleviate any concern that by passing this law, it might make credit unavailable or less available or have a negative impact on these families and people that are affected by this. Having said that, I will now turn it over, I guess, to the Attorney General.
Mr. Chairman and members of the committee, I'm here to address something that has been a huge priority for our friends in the Virginia Legislative Black Caucus and for me as Attorney General, and that is the need to enact smart reforms that will protect borrowers and allow them access to credit while closing loopholes that too often have been exploited. Every year, hundreds of thousands of Virginians who find themselves in desperate financial situations unfortunately turn to high-cost loans to make ends meet. And according to the State Corporation Commission, more than 415,000 payday and car title loans were issued in 2018.
Can I stop you right there?
Yeah.
What percentage of those were car title versus payday?
You know the percentage?
The short answer is I don't know what the percentages are. Joe Face and his folks may, I would imagine. I know there are, I believe it's 170 payday loan branches, offices in the state. I think there are probably slightly more title loan locations, but I don't
That
have a
doesn't help
specific
me.
breakdown.
Okay.
Even as we've tightened rules to protect Virginians from payday and car title loans, some bad actors in the industry just shifted to open-end or online loans that seek to evade regulations and borrower protections. And that's why the comprehensive approach that you have before you today is so important. It tightens the rules to protect Virginians and closes easily abused loopholes so that loans will enjoy the same protections regardless of the type of loan that they seek. And these protections are badly needed. In 2015, I created the first predatory lending unit in the Attorney General's office to raise awareness of the dangers of these high-cost loans and to crack down on lenders who still manage to break the weak laws that we do have. In one of the lawsuits that we cited a Virginia borrower who had to pay more than $6,000 for just $2,000 borrowed. And in another, we discovered a Virginian who had borrowed $1,400, paid $3,200, and still had a balance of $1,500, even more than the original loan. My team and I have done all that the current law allows us to do, but to date, we have been able to recover tens of millions of dollars in restitution and debt forgiveness. But even with that success, there have been instances in which our hands have been tied, and we have not been able to go after some of the worst actors because they've been able to hide behind protections and loopholes in the law, and that needs to change. The bill before you is the single most important step you can take to protect Virginians from high-interest loans. It's a comprehensive measure that will protect borrowers, close loopholes that these lenders use all too often, and give consumers in my predatory lending unit the tools they need to enforce these protections. Even with the protections and reforms included in this bill, Virginians will still be able to access credit that meets their needs without ruining their finances. This bill simply will offer the same protections for Virginians that are already available in many other states. I thank you for your consideration of this measure. I'm mindful of not being too disruptive to the committee's hearing, so I'll leave you to your work, but I have my deputy and head of the Consumer Predatory Loan Unit who's here to answer the details if you have more information or would like more information.
Mr. Chairman, I have a question of the AG. With the statewide high profile that you and your office enjoy, and the comment that you made about how many Virginians have gone to payday or car titling loan, and the publicizing that has taken place in the media and through other consumer groups about how insidious these loans are, how do you explain so many Virginians continuing to go to take those loans out with this atmospheric condition?
You know, people find themselves in desperate financial situations, and sometimes they do desperate things, and that's why it's important that they have protections that are available to them in other states.
Mr. Chairman?
Thank you, Mr. Chairman.
Mr. Chairman?
Senator Obenshain.
Mr. Attorney General, good to see you. I take it that you're concerned about protecting poor people in Virginia?
Like to see that all Virginians are protected.
especially poor people. Those are the people who most frequently take out these payday loans and other loans that would be covered by this.
Yeah.
It just seems to me that, when we talk about desperation and people doing desperate things, there's always going to be a lender of last resort or a place of last resort to go. And, the thing that has perplexed me is that, many of my friends who've been here, you included, lobbying for this legislation, haven't been out there talking about gambling. I mean, if you talk about desperation and about adverse impact on poor people, I'm curious as to where you are and your office is on the multitude of gambling bills that are going to open Virginia up to a variety of gambling, and your views on the impact on poor people of that.
There are a lot of bills out there this year dealing with gambling in Virginia. That's not what's in front of the committee right now. What's in front of the committee
Protecting poor people.
is a comprehensive bill that will protect all Virginians, and experience has shown in other states when laws similar to this are passed that those individuals are still able to get credit.
So you're not taking a position on gambling?
Again,
I
that's
just
not.
want to know your position on protecting poor people.
I think all Virginians should be protected, including those who are poor.
Okay.
Thank you, Mr. Chairman.
Thank you.
Mr. Face is here.
Yeah, you're next. You're up.
Mr. Face is here to answer the question with regard to the BFI.
Welcome. Thank you, sir. The question we had is that Senator Locke said that you all had some concerns about the implementation of the bill, and they have a substitute what were those concerns that your office had?
Mr. Chairman, Joe Face, Commissioner of Financial Institutions with the State Corporation Commission. Our concerns revolved mainly around the regulatory apparatus in the bill. We wanted to make sure that we had what we needed to enforce the bill if it was passed. Wasn't necessarily policy.
Can I ask you a question while you're up here?
Yes, sir.
I asked this before, what percentage between car title and how the percentages break down between car title and payday lending, which is what they seek to get rid of?
Number of loans?
I looked it up. Car title is about 133,000 in 2018, and payday was 283,000 in 2018.
So more than 2 to 1. Okay. And let me ask you, so a similar law was passed in Ohio. And I've been, at least we'll hear from other people, but with respect to the Loan Max people told me that within 9 months, they've gone from 120 offices to 6. And those 6 will be closed by April. Given the volume, he just gave 288,000 and 133. It's over 400,000. Can these other institutions make up if there's that much demand? My question to you: do you feel that what will be left or what will come in will make up the 433,000? And the reason I ask you that question is many years ago when former Senator Ken Stolley and I redid the payday lending bill, the credit union people I remember told me that they could make up the gap. And I said, well, how many loans can you do a year? And they gave me a number that was a tenth of what that total was. So obviously they weren't going to make up the gap. So the question I would ask you is, do you think with who's going to come in here, because that demand's not going to go away, will they be able to come in and fill in the hole?
That's a difficult question for me to answer, Mr. Chairman. Have we talked to anybody in Ohio? I have not personally talked to our regulatory partners in Ohio.
Can I ask you before it goes?
Mr. Chairman, I can address the issue with regard to Ohio. The information that has been spreading with regard to what happened in Ohio is completely and totally false. After Ohio's law passed in 2018, 200-plus new licenses were issued and credit remains widely available. That includes several of the very same companies that are operating in Virginia now, charging our constituents 3 times higher prices. The Ohio legislature decided to prohibit title lending, so all of the lenders who only made title loans in Ohio did leave, which was the Ohio legislature's intent. Our bill does not do that. Title loans will still be allowed in Virginia.
Senator Norman.
Thank you. I apologize for jumping out. Mr. Face, before you leave, I was the one who asked Senator Locke if you would come over, and you indicated that you were the Bureau was primarily concerned about regulatory apparatus. Can you tell me what you mean by that? What did you need to put in the bill that was not there?
Well, examination, frequency, bonding, requirements for access partners that are identified in the bill, things of that nature.
Okay, thank you very much. I appreciate it.
And if I might, to answer the chairman's question earlier, my deputy commissioner tells me that the Ohio bills only came in effect in May of this year. So there's not a whole lot of historical data yet on that, as far as I know.
Okay. Senator Newman.
Before Mr. Face leaves, I've been reading about the access partners. Tell me more about those access partners, and maybe in particular, are they allowed to operate in Virginia today? And if so, why not? If not, why not?
No, they are not allowed today. This is a relatively new phenomenon. We just learned about it, several weeks ago when some folks came to see us. I believe it's in the Ohio law.
Yeah,
It's not in Ohio law? Is it, where else might it be?
California.
California. But it is new here. It has not been in the law before.
Okay. Well, I'll have more questions later, Mr. Chairman.
And Senator Newman, basically what it is it's an agent relationship with the lender. Locations such as I think a grocery store or whatever the case may be. I think it's supposed to provide better access for people.
Okay. Senator Locke, ready? Got somebody in front of you?
There are those who are here in support.
Okay. You want to institute, instead of 5 minutes, can we make it, since there's a ton of people here, let's make it 7 on each side. Can you do that? Okay.
Good afternoon, Mr. Chair, members of the committee. My name is Lauren Schmidt, speaking today on behalf of the Virginia Poverty Law Center. This bill is before you because Virginia's consumer lending statutes are riddled with loopholes that are being exploited by predatory lenders. Each time the legislature has closed one loophole, the lenders shift to another. For example, the legislature attempted to rein in payday loans in 2008. Unfortunately, many of those lenders now just use Virginia's line of credit statute to make loans with no rate limits. And Virginia is only one of 10 states with no rate limit on loans above $2,500. So it's not surprising that we have among the highest car repossession rates in the country for title loans. The lending industry will tell you that that's just the nature of this business, that 300% APRs and massive balloon payments are the only way they can operate. This is false, and we know this from other states that have enacted similar reforms to what you're considering today. Consumers in those states still have widespread access to credit, but under more affordable and fairer terms. Some of the lenders you'll hear from this afternoon operate today in these states. Take, for example, one that you'll be hearing from today. They charge $536 for a 12-month, $1,000 loan in Ohio. In Virginia, this same lender charges $1,400 for the same loan. I want to make sure there's enough time for other people to speak, so I'll just wrap up here.
Who is that lender?
And that one is Speedy Cash.
Who?
Speedy Cash.
Speedy Cash. Okay.
So if you'll hear that this legislation or any kind of reform is going to dry up access to credit because all of Virginia's incumbent lenders will leave, That's what they said in Ohio 2 years ago. That's what they said in Colorado 10 years ago. But as I've mentioned, many of them are still operating in these states. This bill is not about putting lenders out of business. It is about doing something to help Virginians who are caught in vicious cycles of debt, and it's about ensuring that when a desperate person reaches out for a lifeline, they're not getting an anchor that pulls them down deeper into poverty. Thank you.
You're taking their time. Jeff?
Mr. Chairman, members of the committee, Jeff Smith, representing Virginia Financial Services Association, whose members are licensed finance companies under Chapter 15. Senate Bill 33 was the bill that we've offered for the last 2 years, keeping finance companies in their own lane and other payday and title lenders in their lane and out of the Consumer Finance Act. We support Senate Bill 33. And now that it's rolled into this bill.
We didn't roll 33, we rolled 37 and 38. 33 is till next week.
Do what? Mr. Chairman, I apologize, but I was out in the subway and they wouldn't let me in.
Okay.
So I'm catching up.
33 is next week.
Okay, okay. We support 33.
Okay.
I was told it got rolled in.
Good afternoon, Mr. Chairman, members of the committee. My name is Karen Addison with Troutman Sanders Strategies, representing Atlas Credit. Atlas is a successful small dollar lender in business for over 50 years, primarily serving Texas and Oklahoma. During that time, Atlas has made over $3 billion in loans and served 2.5 million customers. They make loans of $100 to $1,500. Most of their customers have low credit scores and live paycheck to paycheck. If this law passes, they are committed to opening physical branches in Virginia, as well as hiring Virginians. We ask for your support. Thank you.
Senator Newman.
Can they stop the
Stop the
time
clock.
just for a second?
Yes, sir.
Because goes to kind of the question I had before. Are you here now, right? And if you're not, and if you supply a better alternative, cheaper alternative,
Right.
why are you not here now, right? I mean, because I've heard about your group, and I think if consumers knew that you were there, they would be shopping for you today.
Yes, Mr. Chairman. Senator Newman, I think that is correct. If we were here, then people would be using our products, but the current law does not allow us to offer the loans that we offer in Texas.
It's a different type of loan then?
Yes, sir.
Okay, all right,
And
thank you.
thank you.
Good afternoon, Mr. Chairman, members of the committee. Thank you. Stan Tretiak with Hefty Wiley and Gore representing Aura Financial. Aura is also a small dollar lender doing business in California, Texas, Arizona, and Illinois. Their typical customers are low income and most often have a very low or no credit score at all. In Virginia, those consumers are locked out of traditional financing options and are forced to turn to high-cost loans or do without. Aura provides small dollar loans that are unsecured installment loans between $300 and $4,000. An average loan of $1,500. If you borrow $1,500 today in Virginia for 12 months, the interest to a title lender would be about $2,500. To a closed or an open-end lender would be $3,500, and our client can make that loan in other states with an interest of under $500 or 5 to 7 times less. And they're prepared to bring those same loans to Virginia. So we urge you to protect this bill, and we think it will protect consumers, enable consumer finance companies to offer lower cost closed-end loans, and create a level playing field for all lenders. Thank you so much.
Hi, Mr. Chairman, members of the committee. Dana Wiggins. I'm representing the Virginia Partnership to Encourage Responsible Lending, which is a group of individuals and organizations that support folks to seek out responsible lending options, but also to fight against predatory lending practices. For the last 13 years, I've been working on this issue. I've come before you every single year. And for most of the time that I'm not here, I am answering questions from borrowers almost every single day of the week, on the weekend, at nighttime. For every car that gets repossessed, I get calls at 3 o'clock in the morning for every time that somebody's dealing with issues with these lenders, when they send the notice for repossession and it arrives the day that the repossession is going to happen and not 9 days before, not 3 days before, I get those calls too. We get referrals from the Bureau of Financial Institutions consumer line for the loans that they don't cover right now, which are all the internet-based loans. We get calls and reference and referrals from the AG's office for consumers for those loans that they can't help them with. So we've talked to thousands of consumers since 2008 when we started our hotline. And I think it's time for us to actually do something about this for all the people that we hear from day in and day out. You may not hear from them, but we hear from them every day. We hear their stories. We hear, how it helped them a little bit, but in the end, it really tore them apart. One point of clarification from, I think, Ms. Schmidt is that the lender she was discussing was Advance America. I implore you to look to your better angels and pass this bill.
Next.
Mr. Chairman, members of the committee, my name is Dr. Janice Underwood, and I am Virginia's first Chief Diversity Officer for Governor Northam. The Northam administration strongly supports Senate Bill 421. Virginia residents are currently charged 3 times more to borrow money than those in other states. And so open-ended lines of credit are offered today by payday and title lenders in stores and online, often without license, with interest rates that are often 299% or higher plus fees. This is an equity issue. Virginia has one of the highest rates of repossession on title loans, as was mentioned before, but I just want to make mention of this statistic. 1 in 8 borrowers having their car repossessed every year is atrocious. This is unaffordable and unsustainable. The Virginia Fairness in Lending Act will reduce costs for borrowers, creating affordability for borrowers and a viable market for lenders. It reduces interest rates and allows for reasonable fees, similar to what payday lenders charge in other states. It ensures affordable payments and reasonable time to repay. In Colorado, we have over a decade of evidence already that similar reforms are proven to work. Access to credit is readily available, and companies, some of which are the same companies operating here in Virginia, operate profitably. Some stores in Colorado did close or consolidate, but the remaining stores now serve even more customers than before. According to state licensing data in Colorado, there are still stores in urban, suburban, and rural areas of the state. Prior to reforms, 82% of Colorado residents lived within 5 miles of a payday loan store. After reforms, it was 77%. Prior to reforms, 93% lived within 20 miles of a payday store. After reforms, it was 91%. In Ohio, similar reforms were passed in 2018. Over 200 stores got new licenses to operate, and lower-cost lenders have entered the market. Based on similar reforms passed in Colorado and Ohio, Virginians with damaged credit will continue to have access to lenders, but their payments will be affordable and they will be given reasonable time. Thank you.
Sure. Thank you. Next.
Mr. Chair, members of the committee, my name is Kenneth Gilliam. I'm the Policy Director for New Virginia Majority. We are a statewide civic engagement and policy advocacy organization that is committed to advancing policies here in the Commonwealth that improve the lives of working class people, of people of color, and other vulnerable populations throughout the Commonwealth. This has long been a priority of our organization, our members, and folks across the Commonwealth. We believe that this bill will help keep consumers safe and also making sure that folks have access to credit that is safe, affordable, and fair. We support this bill.
Thank you. Next.
Good afternoon, Chairman. My name is Len Bennett. My firm, Consumer Litigation Associates in Hampton Roads, won the Pro Bono Award from the Virginia State Bar this year. Not a great business model, but a significant reason for that was all of the free work that we gave, working with legal aid, to help this disease of predatory lending of all types in Hampton Roads, where we, as I drove to court this morning to defend against an online lender, drove through Senator Locke's district and counted 12 on Mercury Boulevard predatory lending shops. Senator Newman, as a George Mason finance and law and economics grad, to answer the question, there is a market failure right now. The reason we can't innovate, if you read the North Carolina study, is because there is no demand to innovate. The primary way that these loans are sold is to, the research, the depositions we've done, are to target people when they're at their most vulnerable. Single mothers with medical needs and consumers of color, we know statistically are the targets for these loans. And those individuals, those consumers, those folks don't look for any alternative. They take what is immediately in front of them, the neon signs in our districts, instead of looking for lower cost alternatives. And if you read the North Carolina study, you've heard a lot about Ohio, a lot about Colorado, but right across the border, they did exactly, or even more seriously, what we've done. You had a University of North Carolina study commissioned by their banking commission. It wasn't done by a consumer group, concluded no detrimental access at all. And they banned title loans. We have no title loans in 35 of the states. We have no title loans in West Virginia, DC, in North Carolina, in Pennsylvania, and there's plenty of access to credit. If you're dealing with a cancer problem, you, with all due respect, don't ask the tobacco industry, you ask the American Cancer Society. There's a reason why every voice that cares about consumers, my own, I've spent my career nationally. I'm on the National Consumer Law Center Board, Public Justice Board, trying to build access to credit, help the unbankable, people that can't get credit scores, get loans. If this was going to hurt consumers, everyone that cares about consumers would be fighting it. Instead, everyone is supporting it. Thanks for going over, Senator.
Mr. Chair, Committee, Rodney Hunter, Minister here in Richmond, Virginia, representing the Virginia 8th Center for Public Policy. I'm here to say that as a minister who reaches out to help those who find themselves in financial hardship, we're looking at children who are underfed, children with no food, houses with no electricity. And when people are looking for a helping hand, they will take that which is not necessarily responsible, but they do what they have to do. They do it not out of stupidity, but desperation. And we are here to say that this bill is a bill that offers fairness. And we're here to say fairness is what we're asking. It's not saying that we're pushing them out, but we just want them to be fair. If the persons who feel like they don't want to be fair, let them go. Somebody else will come in and take their place. But our responsibility is to speak on behalf of our citizens, especially the vulnerable, especially the poor. And I'm here to say I represent them. I see it. I've lived it. And I'm asking you to do that which is responsible for all Virginians. Thank you.
Good afternoon. I'm Natalie Snyder. I'm the State Advocacy Director for AARP Virginia. We represent a little over 1 million people here in Virginia, and I'll be very brief. We do support this bill. We support fairness in lending. We think that consumer lending reform is incredibly important. It's something that we've been working with VPLC for several years on. So I do support this, and I would ask for a yes vote from you. Thank you.
Jay Spear with the Virginia Poverty Law Center. And as Senator McClellan said, we've been here year after year after year playing whack-a-mole. It's time to put an end to that, pass this legislation, and we won't keep revisiting this issue. Thank you.
Okay, let's hear from those who have a different point of view. Senator Norman.
Before we do that, Senator Servell was generous enough to share with us a North Carolina Consumer After Payday Lending Report dated 2007. And I was interested in it, and I consider Senator Servell one of the more erudite individuals in the Senate. But I was interested when I looked at Table 1 that is flying in the face of some of the things that were just said. I'm looking down here, and first of all, the surveys were not restricted to people that took payday loans. They were done to zip codes. And the survey was based upon a zip code. But what I found fascinating, Mr. Chairman, of those people who took payday loans, 78% of them owned homes. They only stopped at income brackets at 45,000, but of the 45,000, 35% had income over 45,000. What was particularly interesting to me was that of those people who did payday loans in the survey, 81% had credit cards, which would suggest that they had some degree of credit prior to coming to the payday loans. And then I respect we're talking about poor people, but it was interesting to me, 62% of the payday individuals were white.
Okay. We will, what was the total time?
17 minutes.
15 minutes. You have, go ahead and start it at 15.
Mr. Chairman, members of the committee, I'm Scott Johnson. I represent Community Loans. We make car title loans and open-end loans. We do not make payday loans. I want to start off by talking a little bit about process. Each of you were just handed a 67-page substitute. We were too. This is the first time we're seeing the substitute to Senator Locke's bill. I'm told the same thing may be in it that was in the other body. We have no way of knowing because today's the first time we saw it. I'm a slow reader. Maybe y'all have been able to read it quicker. But again, to the questions that were asked, we're not sure. I handed out a one-pager up there that I thought may be helpful because some of you weren't here when the car title lending statute was passed 10 years ago. So if you'll look in front of you, it's got a document with blue charts and white charts across. Mr. Chairman, it was your bill in 2010 that regulated car title lending. It was the bill of the General Assembly that set the interest rates that the car title lending industry has honored for the last 10 years. And on the left-hand side of the page, you see that there are monthly interest rates tiered by how much you loan. Under Senator Locke's bill, it would convert. It would not have a monthly rate. It would be a 36% APR rate, similar to what was passed in Ohio. Secondly, Mr. Chairman, you outlawed in the legislation of 2010 the charging of monthly fees or maintenance fees. In Senator Locke's bill, there is a provision for that, different than us. The third line is in our current title lending legislation, there's no total fee cap. You have to abide by the first interest rate bracket or else you're in violation of the law and the gentlemen and ladies from the Attorney General's office will come pay you a visit. Under this legislation of Senator Locke, not only is it 36% a year, not only is it a limitation on maintenance fee, but it is a limitation on the total interest of the loan in there. In the legislation that y'all passed in 2010, the most you can lend.
Let me stop you there, but though she maintains, and correct me if I'm wrong, Senator Locke, that even when you add all this up, what she's saying is it's still far less than what we currently have. Is that correct?
That it is way far less, and we would agree with that, and you'll see when I conclude on this sheet what that impact is. Today, you've got a protection in your law that we've had for 10 years that says you can only make a loan up to 50% of the value of the car. In Senator Locke's bill, it's a straight fee. Verification of income is important. Many of the customers today are self-employed folks. They don't get a pay stub, they don't get a W-2 form until the end of the year. But in Senator Locke's bill, if you don't have something to verify what money they're making within 45 days, you can't make them the loan. Repossession is an issue. Typically, under today's law, you can only charge your actual cost that it costs to repossess. Repossess, remember, under the statute you passed 10 years ago, is the only remedy. Under car title lending, you can't get a judgment, you can't garnish wages. Repossession is it. The main reason for repossession is the car breaks down, and it generally costs $450 or $500 to repossess. Under Senator Locke's bill, she caps the repossession amount to $50. I beg of you, who would make a loan on a vehicle when you know that the repossession cost nowhere near covers that? So overall, at the end, the bottom line is this. We've had a 10-year record of abiding by the rules you set. And under this bill, similar to what happened in other states, when passed in Colorado, Community Loans closed all of their stores. When passed in Ohio, Community Loans closed all of their stores. And if you pass this here, Community Loans will close all of their stores. And to Senator Saslaw's question, why? Senator Locke's bill takes 70 to 80% of the margin out. And what business in Virginia can operate with that type of reduction? I'll conclude by saying this. You may wonder why companies that you've heard from like Atlas and Aura, when their representatives stood up here and spoke, none of them operate in Ohio where this bill passed. That should cause you pause to say, why do they want to come here? Easy. They want to put us out of business so they can come in and be this new access partner that Mr. Face just said he only heard about a couple of weeks ago. This is too much, too fast, and I implore you to slow the train down. Let's work on this in the off season like you do with anything else that's complicated, because it's many more things than 67 pages that you've been having up there on your dais for about 15 minutes. Thank you, Mr. Chairman.
Mr. Chairman,
Senator Spruill.
you put 15 minutes up on the clock. If you allow two speakers to take up all the time, I want to hear from everybody, but it's not fair to let one or two people take up all the time. So 5 minutes are almost gone already from one speaker. If the next speaker takes 5 minutes, you still got 9 more people to go. So I want to hear from all of them. So it'd be nice if they all don't take up all the time. You got 10 people that want to speak, 5 minutes is already gone.
Chairman Zaslaw, members of the committee, my name is Robert Reach. I'm president of Community Loans of America. We have 46 stores in Virginia. We have over 100 employees here physically in Virginia doing their jobs every day. We are a full benefit employer giving both healthcare, 401ks, and other employee benefits, and we offer the open-end line of credit and title loans. We have a 10-year, actually a 15-year presence in Virginia. Scott and Chuck are veritable fixtures here in the lobbying community. Yet on this particular bill, we were locked out. The first time we saw the content of this bill was a couple of weeks ago when the day before it was introduced. We thought that at least from an industry perspective, if we have all this knowledge of what works, what doesn't work, and what happens in other states, we could have brought that to the table and maybe come to some sort of understanding with the opposition groups here that a reasonable, more balanced bill could have been established. Why? Don't know why we were locked out. I can only suspect that the reason we were locked out is because this was not a bill to compromise. This was a bill to put us out of business. We had 10 stores in Colorado, shut them down. We had 47 stores in Ohio, shut them down and terminated 100 employees. This bill represents a 70 to 80% reduction in revenue for our company here. No company can sustain that kind of discount to its revenue and survive. So this bill passes, we are out of here. In terms of, one last thing, in terms of some of these new companies that come in, while these companies do not do title loans, for the most part, they do unsecured loans. What they do is file judgments against people when they don't collect. Aura in particular, in LA County alone, has over 1,000 judgments filed against people. A judgment lasts for 7 years on someone's credit bureau. And if that is helpful in moving someone up to a more prime kind of category of credit, I don't understand how that works. Thank you very much.
Thank you, sir.
Mr. Chairman, a question for the last witness.
Yeah, Senator Bell.
Yeah, if you could stop. If you could tell us what's the failure rate of the loans that you currently offer, please?
Basically, we repossess about 10% of the loans within the state of Virginia. The important thing to remember is that not all of those 10% are involuntary repossessions. About 3% of those are voluntary repossessions. If a car is involved in an automobile accident, Senator, that is our risk. If the car is stolen, that is our risk. If the car is impounded by the city for non-payment of parking tickets, that is our risk. The cars are never in the condition that they are when the loans were made. Their average cars are 8 to 10 years old. And candidly, one of the major reasons for voluntary repossessions is because of mechanical breakdown. The cars just stop working. And people call us and say, come pick it up. And these are non-recourse loans, and there's no obligation on them to pay.
Mr. Chairman,
Sorry, Mr.
members
Chairman,
of the committee,
I
I'm going to be super quick.
I have one quick question for him also. Sorry.
Okay.
I just wanted to confirm, I think you said you shut down all your stores in Ohio, but Ohio banned car title lending, right?
We were also doing unsecured loans and payday loans in Ohio, Senator. We had about a 50-50 mix in terms of our portfolio.
Okay.
And it was just not a sustainable situation.
Got it. Okay, thank you.
Thank you.
Mr. Chairman, members of the committee, B. Gonzalez with Populous Financial, formerly Ace Cash Express. We have been part of this process a few years ago, and I've got some handouts for you that I wanted to share with you. A few years ago, Senator Norman and Senator Saslaw put all our groups in the Patrick Henry for 2 days with Mr. Rubin to come up with a compromise. We spent 2 days in that building coming up with a larger compromise. And I will tell you, as a payday lender, and one of the very few payday lenders left, we are not evading the law. We have stayed in our lane. We were given guidelines that you all passed. And as you can see, the guidelines, we cannot loan more than $500. We cannot loan more than once at a time. We can only loan 5 times in a year on the database. This new law, if passed, would move us to a larger product line. We only offer up to 500. Our loans are about 300 range. So if you look at the number of total payday loans from 2008 to 2018, we've gone from 3.5 million loans to just under 283,000 loans. So the regulations that you set in place have worked. We have stayed in our lane. You told us you can either stay with payday, give up your payday, and go into something else, and we've remained in payday. So we're not evading the law. We have not used any kind of loophole. We're still maintaining that short-term credit for folks. I will tell you that there are in line 115 in the substitute and line 325, they talk about access partner. We don't know what that is. And what I will tell you is that on line 489, there's still a prohibition on brokering. Access partners seem to be a broker of these loans. That seems to be a major conflict in this bill that we've just realized, so I think you should take a look at that. I love Senator Locke, and she knows that I've been down here every year fighting against payday loan prohibitions. And every single time I've come and spoken to you, the anecdotal story has been someone that has taken a loan and has paid thousands and thousands of dollars back. That cannot happen under the Virginia law that you passed. There's another bill that Senator Linwood Lewis has on online lenders that are not regulated. That's the way to go. We are happy to get in a room and come up with a better compromise, but this is not it. Thank you.
Mr. Chairman, Reggie Jones, representing Advance America. I appreciate the fact that we've got people who want to improve the process of this in Virginia. We have not been a part of trying to come up with that solution, but what it appears that we have here is some outside interests who would like to come into Virginia, but under different rules than we have today. The way to do that is to come into Virginia, compete, and show that you can put the payday lenders out of business or any other lender out of business. 10 years ago, you took some steps to put major restrictions on payday lenders, and many of them left the state at that time, but Advance America committed to stay in here and continue to operate as a payday lender. We believe that we're providing a product to people who need it, giving them access to credit at a fair rate that you can survive in Virginia. If you go to a 36% rate, think about that. For every $100 you lend, you get 10 cents per day return on that $100 that you lend. So if you lend someone $500, which is maximum that a payday lender can lend in Virginia, in 4 months, you would make $56 under a 36% rate. Now, they put a maintenance fee on there, and then they put a cap on the maintenance fee, and there are other things that are done. But think of the numbers. You cannot operate under that. Now, perhaps they do not want us to operate in Virginia, and I understand that. But what they're looking at is bringing in people who want a different program that you don't know what it is. I don't think any of you really appreciate the program that those who want to come into the state want to offer. They want to say, we won't have stores in Virginia. We won't have storefronts. Maybe that's the way to go. Maybe everything should be online today. They want to have access to payrolls, we understand, so that they can collect from the payrolls. We don't have that today. They want to cherry pick borrowers. As I understand it, in California, they make their loans to people with credit scores between 610 and 640 and up, where the average non-bank credit person today has a 579 credit score. Advance America will make that loan if they can qualify. They're not going to make the loan if it's too risky, but they'll make that loan if they can qualify for the loan today. And
what these other lenders want is they want the ability to offer other products and for which they can make money. A payday lender by Virginia law is restricted to one thing, the return on interest on the loan that they make. The difference too, they want a $2,500 limit, I understand, in this bill, where payday lenders are limited at $500. Today, a payday lender is limited to first term of loan is 5 to 6 weeks. They want 4 months to 24 months. A loan cap. Today, the loan cap in Virginia is 20% of the loan, the interest rate cap, whereas they want 50% of the loan under $1,500. And fees. Today, a fee that a payday lender can charge in addition to the interest rate is $5, and that's for the access to the database, whereas under this one, they want 8% of loan not to exceed $25 a month. It's my understanding that the Bureau of Financial Institutions, they do not get any complaints against the regulated payday lenders who are making a regulated loan today, except those who complain that they can't borrow enough from a payday lender. They're not substantive complaints. So I urge you to look at this, look at it fully, make sure we're not throwing out people that should be here, and perhaps there are others who should come in and compete in the marketplace. Thank you.
Afternoon, Mr. Chairman, members of the committee. I'm Chris White with the Vector Corporation here on behalf of Title Max. Mr. Bussey is going to talk in a minute just how this bill is going to impact our customers and access to credit. But I did want to follow up on what Mr. Johnson said. If you remember how we got to the 2010 car title loan, we had a joint subcommittee that was formed in 2009 with your leadership, Mr. Chairman, and the other committee down the hall. They deliberated for the course of a year in a collaborative process with all of the stakeholders, including the State Corporation Commission, came up with a work product that passed the Senate 36-4. That was a year-long process for one product. You have a substitute before you this afternoon that re-regulates 4 different products and introduces a product called an access partner. It's just something to consider as you all deliberate this bill. Mr. Bussey will be happy to talk about the impact to access to credit.
Thank you.
Good afternoon, Mr. Chairman and members of the committee. I'm Travis Bussey with TMX Finance Family Companies, and we operate under the Title Max brand here in Virginia. Title Max is a licensed motor vehicle title loan lender with 79 retail locations and nearly 210 full-time employees with benefits in the Commonwealth of Virginia. We are proud to help Virginia consumers meet their credit needs through the responsible use of emergency loans. We understand that the intent of Senate Bill 421 is to protect consumers, but the rate cap proposed in this bill would eliminate the state's title lending industry, and with it, a viable credit alternative for many borrowers in need. In 2018, we made over 41,000 loans to Virginians, and under the proposed rate cap, we would not have been able to help those consumers. And in turn, in order to meet their needs, these borrowers would have been forced to sell their motor vehicles or move to unregulated, unlicensed lenders, since banks and credit unions, for the most part, don't lend to them. We ask that you would oppose this legislation and maybe take a step back and study something to get this done right. Thank you.
Thank you. Next.
Mr. Chairman, members of the committee, Nicole Brenner with Reed Smith on behalf of the Online Lenders Alliance. First, I want to correct a couple of things that were said. Also love Senator Locke, but want to be clear that there are 20 companies licensed by Ohio DFI to do business under their new law that just went into effect at the end of April. I pulled it from the Ohio DFI website. It's not 200 or 300, it's 20. And it includes some of my members who've also sent a letter to Senator Surville. I'm happy to provide anyone a copy. One of them was also mentioned earlier in testimony. Although the Ohio law goes up to a $1,000 loan amount, this bill proposes to address that problem by going up to $2,500. My member Curo only offers a $300 loan, the same as Possible Finance, who's in support of this bill, because the rates don't go high enough to offer more than that. So there's no access to credit over $300. It's too big of a risk under the Ohio law. They're also not operating. They are operating at a loss on that product. It's not sustainable. It's a 7 to 8 month give it a go. The fact that they're licensed there doesn't mean it's successful or that there's widespread access to credit. I'm sure you've heard that other of my members are licensed in Ohio. They would estimate that they're turning away about 90% of the customers that they used to serve before that law went into effect. In Colorado, I agree with the earlier statements that there's more data. That bill was also rescinded on a ballot initiative after a decade because it wasn't working. But over those 10 years, in the first 4, according to data by the Colorado Department of Financial Institutions, bank revenue went up about 17% because there were more overdrafts, because those are the options that consumers will be left with under this bill. Ohio has a session that's much longer than Virginia. They took out some of the things that are in this bill, like the income verification database that locks consumers out of credit, and that was used in the bill in Ohio. I would urge you to provide more options and not less. We think this bill is an unreasonable restriction on access to credit.
I have a question.
Yes, sir.
So the law that they were talking about that was passed in Colorado, the law that they passed in Colorado has been repealed by a referendum. Is that what you're saying?
My understanding is there was a ballot initiative in 2018 that removed parts of that law, so it was in effect for a decade.
Okay. All right. You finished?
Yeah, that's
Next.
it. Okay.
Welcome, Guy.
Mr. Chairman, my name is Guy Rolling. I represent Allied Financial Services. They're headquartered, Access Financial, actually they're known as Allied in Virginia. They're headquartered in Cincinnati, Ohio. And just to, I thought that you'd be interested in the information they provided me about the effect of the Ohio law that has been mentioned here. It's my understanding that prior to the enactment of the new Ohio law, there were 1,154 consumer finance locations throughout the state of Ohio. Since that law was enacted, that number has been reduced to 228. Of that 228, 33 are my clients' offices, and they project that they're going to close 28 of those offices in the second quarter of this year. So I just want to give you a snapshot of the result of the Ohio legislation. I think that's a pretty drastic reduction. And I would imagine those consumers just didn't go away. They're going someplace else for financial services. Thank you.
Mr. Chairman,
Welcome,
members of the
Aja.
committee, 3 numbers for you is all I have. I'm Aja Dominicone with Loan Max. We do not operate in Colorado. We never have. We did have 113 stores in Ohio. We're in the process of closing those down. They'll be completely gone as of April. We stopped making loans last April. The 3 numbers, I know you've had a ton at you, but the 3 numbers that I care about are 200, which is the number of employees that we will have to let go if this legislation passes. And they will lose their income, and they will lose their access to health insurance, as well as their families. 40,000 is the average number of customers that we serve a year here in the state, and I worry about what they will do when we are gone and what their options will be and how much more costly and potentially dangerous they might be. And finally, the last number is 20. We have less than 20 complaints per year in Virginia and have for the last several years. Since the reform that you passed, Mr. Chairman, back in 2010, dramatic decline in complaints. Not that we had that many to begin with, but we did see a dramatic decline. So less than 20 complaints. And I'm just going to leave you with that, and I pray that you will vote no against this legislation. Thank you.
Mr. Chairman, I think I'm last. Jabo Covert with Checking the Cash. Mr. Chairman, members of the committee, we had 39 stores in Ohio. We shut it down the day that the law went into effect. Thousands of customers, none of which who complained, no longer could use our stores. And again, like Ms. Dominicone said, more importantly, I was there when we had to tell 200 people that they had lost their jobs. Here in Virginia, we have 29 stores and over 100 employees. And again, those employees will not be employed, and we will not have our stores open to serve our customers if this bill, as I don't know what's in it because I haven't been able to read it yet today, but as I understand it, we would not be able to operate, and that's sad. Mr. Chairman, I'll leave you with one last number. There's 0 employees and there's 0 customers of mine that are here today to support this bill. Thank you, sir.
Senator Locke, you want to wrap it up?
We have a clarification about Colorado.
Just a clarification about the Colorado, Mr. Chairman and members of the committee. So in Colorado, when they had their ballot initiative, what we tried to do with our bill is to do what they did in Colorado to close all the loopholes and to make sure that everything's regulated very similarly. So they had 2 different installment statutes that they enacted. They got rid of title lending specifically in Colorado. They didn't want it there. So that's one piece of Colorado that is different from ours. But the other piece is that the ballot initiative was led by payday loan activists that are probably hate what we're doing because they would rather ban payday and ban a lot of these lending as opposed to allowing it to happen. But because they were able to tighten up the regulations and close all the loopholes, and there were two different statutes that were very similarly set up, those lenders didn't have to fight to stay around. They just went into, they had the license in one statute, they went into the other statute that was similarly set up because all the loopholes had been closed. That's one of the lessons that we learned and we tried to do with this legislation, is to make sure that all the loopholes are closed so that if for some reason, and we don't have the ability to do ballot measures here, obviously, not in the same way. And we don't intend to do that. We wouldn't have gone through all this trouble if we were actually trying to eliminate the industry. That would have been a straight 36% cap or a ban bill or something like that. This was about making sure that there were options. And so in Colorado, the story is really that they allowed for, even though there was a ballot initiative, there was another statute that was set up very similarly, so all those lenders could go into the other statute.
Okay. Senator Locke?
I never felt so loved. At any rate, thank you, Scott. Well, Mr. Chairman, those who are in opposition to this bill had an opportunity to see this substitute when they were lobbying against it in the House. So this substitute is not new to them, although they claim that this is the first time that they've seen it. That is not true. Okay. And the only thing that's changed was the section on the BFI. That's the only thing that changed from this bill when it was first put out there by me and by Delegate Bagby on the House side.
Okay.
That's the only thing that's changed.
Okay.
Okay, so, this whole thing about this, the first time I ever saw it, just baffles me. So to wrap up, in closing, I just want to quote President Obama when he spoke on this issue of predatory lending. As Americans, we don't mind seeing folks make a profit. I'm not here to not have anybody make a profit. And if somebody lends you money, then we expect you to charge interest on that loan. But if you're making that profit by trapping hardworking Americans into a vicious cycle of debt, you got to find a new business model. And that's all that we're asking for here, is to find a new way to do business. And that's what folks don't want to do. They don't want to find a new way to do business. They want to keep doing things the same old way that they've been doing it. This bill closes all the loopholes and allows Virginians to access credit on fair and reasonable terms. One of my role models, the late Senator Yvonne B. Miller, sat on this very committee and spoke out consistently on this issue. I wish she was here today to see the amount of support we now have on this very issue. Make no mistake, this bill would be life-changing for many of our most vulnerable Virginians. We have an opportunity today to deliver on the promise of Senator Miller and others like her who had the courage to stand up to these predatory practices when they were first introduced. And I ask that you support Senate Bill 421.
Mr. Chairman.
First, we have to adopt the substitute. Is there a motion?
So move.
All right. All those in favor of adopting the substitute, say aye. Aye. Substitute's adopted. Bill is, as amendment in the nature of substitute, is before you.
Mr. Chairman, down here.
One at a time. Senator Marsden.
Thank you, Mr. Chairman. Well, I worry about so many things on all sides of this issue. This is a huge shift in Virginia. I want to see people have access to credit. I don't want to see people abused. I think there's examples of that on both sides. And I would like, if it's appropriate, Mr. Chairman, to make a motion when you feel everyone's had a chance here to speak, to report this bill, but to establish a reenactment clause to give everyone an opportunity to transition, to talk in the off-season about things, but clearly the intent of the legislature is to improve what our citizens go through in terms of the loan process. We want it to be the best ever, but it just seems like we're always wiping out one thing and bringing in another. But we still have to maintain access to this credit, and I think a reenactment clause, slowing this train down a little bit, giving us time to react, next year, giving these companies a time to transition, perhaps into the very model that Senator Locke proposes. But that would be my motion, Mr. Chairman, at the appropriate time, if that is not now.
And by the way, this is this is numerous bills that we have here that requested by Senate Finance. So, all right, Senator Servell.
Yeah, Mr. Chairman, speaking to the almost motion and/or the bill, first of all, I have a question for staff really quick. Can staff confirm this bill is identical to the bill that was presented in the House Commerce and Labor Committee a week ago?
Mr. Chairman, Senator Shervill, the Senate Bill 421 substitute is identical to the HB 789 substitute.
Great, thank you. I think that'll give some people some peace of mind. Now, speaking to the motion and the bill, et cetera, Mr. Chairman, first of all, I appreciate the fact that the four different, the payday lending companies, the car title companies, and the consumer finance companies who are actually involved in this bill, I think, have all been largely following the law. We'll note there was one little hiccup about 4 years ago when Car Title was using consumer finance licenses and making different loans, and we brought that up, and they immediately stopped and promised they'd stop, and as far as I can tell, they've stopped. Technically, it wasn't illegal, but it was kind of, I thought, a breach of faith. But from my perspective, the system we have isn't working. I mean, if you look at the SEC's statistics, at least on Car Title in 2018, there were 133,000 loans made to 112,000 people. And out of those loans, 41,000 people failed to make a monthly payment on a motor vehicle title loan for at least 60 days. So that's nearly a quarter, actually more than a quarter of the people getting the loans were failing on them at some point during the period of the loan. And the definition of a predatory loan is a loan that's sort of designed to fail, where you don't take into account the borrower's ability to pay. I would also note that 14,000 vehicles were repossessed just in 2018 alone. Since we've enacted this, probably over 130,000 vehicles, by my math, have been repossessed. Most of them, but it looks about 80% of them are sold. And while I understand some might just be surrendered, it just seems to me people losing their cars isn't really a good thing or something we want to encourage or design a system to engender or facilitate, which is what we've done. I would note that I don't view this legislation as necessarily being a test tube baby like a lot of other folks do. Colorado's done this. I understand Ohio's new and things are still going there. But North Carolina took steps, and their study, I think, says a lot. And if you look beyond the data at the focus groups, beyond the poll, they actually did a focus group where they got former payday lending people into a room, and they asked them what it was like. And they have a whole series of anecdotes here, starting on page 15, where people were saying things like, they kept calling me, asking me, would you like to extend your loan? My answer was, why, yes, I always would. Another person said, I'm happy, but then I realized I'm probably perpetuating the problem, and the reality sets in. I've put myself in another bind again. Another person, it became a habit. Others said, it aggravated me. I was stupid enough not to ask someone in the family to lend me money. One said, another has learned how to negotiate with bill collectors instead of taking more bills. And then my favorite, which sounds to me like they interviewed Senator Sproul, thank you, Jesus. Now I can't do that anymore. In any event, I believe in the Pew study, they estimated that Virginians are overspending about $200 million a year. There's about $200 million of excess profits that these companies are getting that should stay in Virginians' pockets. And I think if we were to pass something like this and pass a more reasonable system, Virginians would have more money to spend, wouldn't be in such a bind, wouldn't lose their cars. And I would just note that I think if the Senator Marsden's concern is a time to transition, the proper remedy would be a delayed enactment as opposed to a reenactment. And so that's where I am.
Okay. The bill, Senator Marsden. All right, the bill is now before us.
Mr. Chairman, I have a motion that we pass the bill with a reenactment clause and refer to finance.
Is there a second?
Mr. Chairman, Mr. Chairman, could that be broken up into the different motions you're making? In other words, you have a reenactment clause, and then you have a motion to pass the bill, if you don't mind doing it that way.
Certainly, Senator Newman,
All
we're
right.
glad to. So,
Mr.
first
Chairman.
motion is the reenactment clause.
Is there a
Chairman.
second? All right, all those in
Mr.
favor
Chairman.
of a,
I have a substitute motion.
okay,
Substitute motion would be to have a delayed enactment clause for 1 year.
okay. All right, the previous question's been called for. All those in favor of moving the previous question, say aye.
Aye.
All those opposed? No. All right, chairs in doubt, record your vote. Those in favor of moving the previous question, vote aye. Those opposed, vote no.
Ayes 7, noes 8.
I voted. The previous question's is not ordered, yeah. So now the primary motion is before us. I think I I meant to vote no, and I think I voted yes. So having voted on the prevailing side, I move we reconsider the vote by which the previous question was rejected. Oh, okay, you're right. Okay. All right, the substitute motion of Senator Survels is before us to adopt a delayed effective date. All those in favor of adopting that, say aye. Aye. Opposed? No. All right, chairs in doubt. Cast your vote. If you're in favor of a delayed active date, say, vote yes. If you're opposed to the delay, and we'd go back to the other one, vote no. All right.
Ayes 9, noes 6.
It passes 9-6. The bill is now before us on final passage.
Move report and refer.
The motion would be to report and refer to finance. All those in favor, vote aye. Those opposed, vote no.
Ayes 11, noes 4.
Can I go now?
You're free.
Okay.
Bill's passed.
Thank you.
Okay. All right. Senator Lewis, would your bill be in conflict then with, you don't? Well, I'll tell you, there's a lot of people, how many people are here on the minimum wage bill? All right, well, we may as well get moving on that. We'll take that up first. All right, it's Senate Bill 7. And there's been some amendments to you want to let me briefly I'll go out here and you want to take over.
Yeah, that would make, I think so.
Senate Bill 7, Senator Saslaw.
Right. Madam Chairman, what this does is it's a pretty straightforward bill. Effective July 1st of this year, minimum wage in Virginia would go to $10 an hour. And then every year thereafter up $1 until in 2025. In 2025, it would stop at $15 an hour and be indexed after that. And one of the, there's been a couple of amendments, and there may be even more, but it doesn't, I think, does the amendment, Tom, one of them include home health care workers? Tom?
Mr. Chairman, on the substitute being passed out, it says that employer includes home care providers, which are defined in the substitute.
All right, the other is, somebody brought up this, and I think it's valid, because I noticed in Europe where they have these, they have an exemption for immediate family members. You know, if you're gonna have your 15-year-old kid come in and help you stock the shelves, that wouldn't apply, you know, but it would be another exemption. You can add this to that, and then we'll take a vote on all this, on the amendments, would be to exempt immediate family members. Immediate family, not second cousins or that, but, you know, essentially your wife, your kids, that. That essentially is the bill. The measure also provides minimum wage applies to persons whose employment is covered by FLSA.
Madam Chair?
Senator Marsden?
Madam Chair, I don't know exactly how to roll this out, given the fact we haven't rolled the other minimum wage bills into Senator Saslaw's, but I did prepare a substitute, whether you want to consider it a substitute or amendments, and the four, you know, basic issues that I felt, you know, would be helpful to this bill in terms of, you know, getting Virginia, which I'm all in favor of the minimum wage. I have a bill in. What my substitute would do is it raises the minimum wage incrementally between 2020 and 2025, so it's a 6-year deal as opposed to a 5-year. And when you hit 1175, and I chose that number in my calculation, in 1968, that was the time when they felt the minimum wage did what it was supposed to do. It was something that's been considered sort of a living wage. And if you adjust it for inflation, then it comes up with 1176. And the idea here is that at that point in time, you would also be able to count benefits once you hit the 1175 figure, which is, I think, in year 3. That you would be able to count benefits. And we don't have to worry about the adequacy of those benefits and what they ought to be. We can take that up next year. But to consider that, that's a huge impact on the state budget. Because if I can finish, Senator Saslaw, the issue would be when it hits 1175, state employees who are receiving health insurance would then be sort of covered up to the $15, which would you know, certainly alleviate the state of having to make those final payments. I think it would have a huge positive impact on the budget. It also it allows for employers willing to pay a training wage of 75% of the minimum wage for the first 320 hours of job training, and also to look at it directs the Virginia Employment Development a partnership to study the impact of a regional minimum wage next year and report back, because I think it sometimes could be very difficult to have a disparate minimum wage at $15 between some of our rural places in Virginia and some of our more urban spots. And the last thing it does is the Commissioner of Labor and Industry can halt an increase of the minimum wage if the state sees negative job growth as measured by federal factors. So that is what that done. We can pass that out if those are the elements here that could be woven into Senator Saslaw's bill. And I think that would transition Virginia much more logically into a minimum wage increase, which is pretty dramatic, that we can absorb on a statewide basis. A lot of these $15 minimum wage things have been done in cities, which I think it is a much easier area to do this in. Statewide, with a state with the disparate economies that we have here, I think could be difficult. And so I would ask members of the committee to consider these things as we consider Senator Saslaw's bill, which I'd be delighted to roll into if we had these amendments.
I would ask that be rejected. Let me tell you why. First off, well, I won't be here 10, 12, 15, 20 years from now. Some of you will be. You'll be back here. That minimum wage will still be $11.75. Won't go up because these people will be claiming that, well, I'm paying benefits. A lot of people pay benefits and still pay decent wages. So it ought to go to that. If you want to, that should not be, you know, combined into the total. It ought to be in addition there too. And you know, like I said, you'll be back here 10, 12, 15 years from now, still trying to raise it above 11.75 an hour. You know, when you've got people like, as I mentioned earlier, when you have people like Bill Gates and Warren Buffett telling you that you got an income disparity problem in this country that needs to be dealt with, you might want to listen to these people. So that's why I have the bill, you know, the way it is, without, you know, a ton of ifs, ands, and buts. You know, I don't want, you know, somebody to say, well, we didn't grow at the rate that we have, so we're suspending the minimum wage, you know, from going up.
Senator Sasslaw.
That's a blueprint for disaster.
I know you don't want that one rolled into your Senate Bill 7, but we have here Senate Bill 73, 81, and 816 that will roll into your bill.
If they're rolled into mine, then they adopt my bill.
Right, okay. So
Right,
you okay
and
with
I have
that?
no problem with that. You might want to make sure with all the people who have that, but if it's rolled into mine, it is the same as mine. What you should do is.
Senator Marsden.
Thank you, Madam Chair. I think my goal here is to have those elements at some point in time is considered as a substitute to the bill we've all rolled into, or to keep mine out and let my substitute stand alone and let us choose between the, you know, the two vehicles. But I'm very, very concerned that, you know, just taking this up, cash will have a huge impact on the state budget, will have a huge impact on Virginia's economy. And I just want to slow this down a little bit and give the business community an opportunity to adjust. And however we can have that considered, either as a substitute to Senator Sasslaw or my standalone substitute, I would like that considered by the committee.
Madam
Senator
Chair,
Norman, and then Senator Spruill after.
Just one comment. I would prefer to have a separate vote on, you know, adopting his whole package. Because, like I said, I mean, I've got a bill that's relatively clean, goes up $1 a year to that. And by the way, if you have as I've told people before, if you're planning on starting a business and you say to yourself, geez, I can only make it if I pay $7.25 an hour or $8 or $9. Just a couple observations, and I know this from a personal experience within my own family. If you think small, you get small. And if somebody is planning on starting a business that's predicated on that, just two observations. Number one, you're probably not long for this world. And number two, you're definitely not the next Warren Buffett. And you know, that's not where our future doesn't lie in minimum wage jobs. We need to move this up. You talk about the cost to the state. Let me tell you what hasn't been calculated is these people are going to be paying a lot more taxes. They're going to be spending a lot more money, okay, which is going to have what's called a multiplier effect. So it's going to generate a fair amount of taxes to cover that cost.
Senator Norman.
Two questions, Senator Sasslaw. I just read the latest version that you put over, and it appears in paragraph 14 that if you're 18 years of age.
I don't have it in front of me.
Well, I'm going to tell you what it is.
Okay.
If you're 18 years or less and you're a full-time student and employed not more than 20 hours, you're exempt from this. And then I see if you're a babysitter and don't work more than 10 hours, you're exempt from it. In all the other industries, that even if I have a part-time employee who works 8 hours a week, this bill is going to pertain to them?
I would imagine it would if you're a legitimate business.
Okay.
Senator
The
Norman.
second question is it your intention that this bill applies to waiters and servers, most of whose compensation comes
No.
from gratuity?
I'm not dealing with the tip minimum wage in this bill, and the waiters and waitresses are totally opposed to raising the tip minimum wage. And you've seen the demonstrations that have occurred elsewhere on the East, when there's been attempts to raise that tip minimum wage. In Boston, 3,000 waiters and waitresses went out in the street to protest. And so the city council withdrew their proposal to raise the tip minimum wage.
In Maine, they actually passed it, and the waiters and waitresses, believe it or not, got it to a referendum and repealed it. In D.C., let me finish, in D.C., somebody got a referendum on there, and it passed 55-45. The city council overrode the referendum and put it back where it was. So it does not include that. My understanding is that Senator Marson has struck his bill.
Senator Norman?
Okay, so is there a specific carve-out in your bill as it exists this moment
For what?
for waiters and servers?
It would not apply to them. The tipped wages, I think, is in a different part of the code.
Madam Chair.
That completes your question, Senator Norman? I saw Senator Sproul and then Senator
Senator
Bell.
Norman, if I find out I've made an error, we'll correct it on the floor. I
Senator
don't think I
Senator
have.
Sproul and then Senator Bell.
Madam Chair, we are working on the substitute, is that right? Tom, are we on the substitute?
No, not yet, not that I know of.
Madam Chair?
Senator Sproul and
my
Senator
question
Bell,
that-
then Senator Newman.
Shouldn't we adopt substitute?
Madam Chair, on that.
Senator Newman.
Point of order.
Senator Newman's point of order.
It seems to me that we have two substitutes, right? One is, we're going to look at, that is the Morrison substitute, right? And then we'll have the other one. It seems to me that those should be maybe votes that we take. Maybe we take testimony and that type of thing. But I hope we get the opportunity to vote for them, because for my little area, the regional part that's in that substitute is more than critical. It's stunningly critical, because we don't live in Northern Virginia. We can't do $15 an hour.
You wouldn't until 2025.
I don't think we can do it then. So, Madam Chair, my point of order is
Madam
I'm
Chair,
just hoping
I had the floor, you
that,
took away from me.
no, I just had a point of order. I'm sorry, I said something I shouldn't have. That we can get to the two substitutes at some point and consider both of those two substitutes, Madam Chair.
Madam Chair?
Senator Sproul.
Tom, I need to the question was this. The patron put together a substitute. So how can we consider another substitute when we are talking about the patron's bill? We have to look at his substitute first. So how can we bypass his substitute and get to a substitute that Senator Marshall want to put in? But the bill states by the patron is that we are working on his substitute. So how can we discuss his substitute when we haven't accepted his substitute? Marson bill has to wait until we do this substitute first.
Mr. Chairman, Madam Chair, Senator Sproul, I believe Senator Marson, in anticipation of being rolled into Senator Saslaw's bill, was just offering amendments to consider as part of a global discussion. Certainly, since it seems like Senator Saslaw is not amenable to those amendments, that they should be heard separately.
So, Madam Chair, so in that case then, if he's not amenable to it, then that means that we have to discuss Senator Saslaw's bill first, the substitute. He had said that he is not amenable to discuss his bill. So if we're going to discuss, what are we discussing? He is before us now with the substitute. He does not want to hear nobody else. So I want to talk about, if we can't discuss his substitute, why is he up here? What are we talking about?
If the substitute is not before us, I want to finish
But
hearing.
the substitute is before us.
I didn't.
No, we're talking, my bill is before us.
Senator
Okay.
Saslaw's substitute is before you.
But nominally, Madam Chair, when you have a bill before us, and the first thing we say that there's a substitute, the first thing we normally do is adopt the substitute, then we discuss it.
Yes, but the substitute has not been adopted. There has not been a motion. So
That's why I moved that we adopt the substitute so we can discuss it.
I want to hear from Senator Bell, then I'm going to go back to Senator Saslaw and see if we can get a motion on the substitute. Senator Bell?
Madam Chair, my question is for council. I'm looking at the part, and this is in, I think this is going to be applicable for the SB 81 as well. The language on lines, from lines 32, 33 in the substitute. Any
can you-
persons whose earnings capacity is
Madam
impaired.
Chair, how can you have discussion on the substitute that have not been
Th-
adopted?
This language is in the basic bill as well. We can go to the basic bill. I'll give you the lines from that if you want. Basically, it talks about you can pay people if they have a disability less. My question to council, is this in accordance with the Americans with Disabilities Act or not?
This part, you put it in Dick's bill.
I think it's against
Yeah. Senator Bell, I would say that that is current law. It's an exception to the existing minimum wage act.
But the Americans with Disabilities Act says we cannot discriminate. How could we pass law that would do that?
I would defer to your expertise on the ADA with that, sir. I would also point out that I believe Senator McClellan has a bill removing that exemption. The exclusion bills are separate from the wage rate bills, but certainly you
I have
could
no
consider them
problem
together.
removing that from the bill, amending that. None at all.
Madam Chair, if
Senator Bell.
Madam Chair, I would, we'll have to go with both these bills, but I think this would have to be addressed in both the bills, because I think we have a problem with either one of those bills if that's in there.
Senator Saxlaw.
Then I would move that that be struck.
How can you strike something you haven't had yet?
Senator.
Well, they have to
I move the
adopt it.
substitute, then strike it.
You have to adopt the substitute.
I don't care. You got a
The
substitute.
substitute is what's before us.
Then I need to get a motion on the
You
substitute.
need
what I'm trying to tell you.
to adopt the substitute.
I so moved.
It's been moved
Yes.
properly second that
Madam
substitute.
Chair, I have a
Senator Newman.
I have a substitute motion that we temporarily leave it on the table. Here's why. We need to hear the testimony. We've got a bill in front of us. We do this all the time. We go through the soup. We listen to all sides, and then we adopt the final amendments and substitutes. I think we need to listen to those people who come for and those come against, and then we can vote on a substitute that we determine fits the problem the best. So I move that we substitute
You already
motion.
have a substitute. I
Whoa,
already
whoa,
made
whoa.
a substitute first.
Point of order, Hope.
I already made a substitute before he got on there.
His motion is that,
Lay
the
it on the
substitute motion is that you don't adopt the substitute.
That's my motion. I said before he
No,
was,
no.
Mine was laid on the table.
Okay, the first motion was to adopt the substitute, so I guess maybe we need to vote on that, and we got,
Hold off from here is the testimony.
Madam Chair.
yeah, I think what we need to do is hold off on any substitute and hear from the speakers first, and then we can come up with something that we can all maybe vote for or against. Senator Saslaw, you want to call up your speakers who are in support of your bill?
You might want to make it 7 minutes. Okay. Don't eat up the whole 7 minutes, okay? All right.
My name is, ready?
Yes.
My name is Patricia Namiello. I'm a resident of Arlington, Virginia. And
Ma'am, could you suspend for a moment?
Absolutely.
Interrupt you just a moment. I apologize for that. Excuse me. Process-wise, the only bill before the committee is the original bill that
That's correct.
Senator Saslaw introduced, and all this collateral discussion is totally inappropriate. And the question is, are we going to act on the bill as it was introduced?
Right now, there's no bill before us.
Because your substitute has not been adopted.
that's what I'm trying to tell everybody.
I would renew my motion to adopt the substitute
Now, something.
as proposed by
It
myself.
has been moved and properly seconded that the substitute be agreed to.
Madam
Senator
Chair.
Newman.
I don't think this is hard. I think we can say that we're going to, I have a substitute motion that we leave that on the table, and we hear from the witnesses before we adopt a substitute, because there are two substitutes, so it's very proper for us to have a discussion about the underlying bill before we decide.
Well, then what you should do is defeat the original bill and go with his. But you should adopt this. My motion would be that we adopt this and vote on this first.
His bill's
Okay,
not-
I got to tell you, in all the years I've been here, we've never not adopted one to have people then come up and testify to the fact that we have no bill before us.
We have your bill before us.
So I would renew the motion, and if you don't like my bill, then you vote it down, and that's the end of it, period.
Senator
ahead.
Saslaw, your motion, as seconded by Senator Sproul, is the substitute.
Right,
Am I correct?
that's correct.
Okay. Council, is that, I think we're gonna need a recorded vote.
Okay.
Yes.
Generally, yes, that's right.
Where's mine?
Is it there?
I'm pressing it.
There, Sasson,
Hang on one second.
push Sasson.
It's not,
There you go, correct.
you got it? Okay.
Ayes 11, noes 4.
The substitute is before us, Senator Saslaw.
Okay. Well, I've already presented what it does. We need to hear from both sides, then we can vote on amendments.
That is correct. Now, the substitute is before us. Ma'am, can you come back?
My name is Patricia Namialo. I'm a resident of Arlington, Virginia, and a proud member of United Local 25. I am an employee at Hotel Liaison, a union property that proudly pays a living wage. As United Local 25, we make more than $15 an hour, but we have made it our priority to fight for the rights of those that cannot fight for themselves. Getting $15 an hour is just the first step. Too many Virginians don't make poverty wages. They have no sick pay time or health insurance. They have to spend $500 on ER visits when they're sick just to get a doctor's note to avoid getting fired. I urge you to support a bill that raises the wage for all workers. Struggling, hardworking Virginians are depending on you to be extraordinary to change the history of Virginia by raising the minimum wage to $15 an hour by 2025, leaving no worker behind. Thank you.
Thank you. Could you suspend the clock for a moment? I know a lot of people want to speak, but if you look at the clock, it's 5 minutes, 55 seconds left. And so as each of you come up to speak, if you will be mindful of the fact that there are others behind you who would like to make a statement, make your statements as brief as you can. And if those who follow, if that statement has already been made and you don't have a different statement, if you would just state your name and indicate your support, it would be very much appreciated. Look at the lines. Thank you.
Thank you, Madam Chair, members of the committee. My name is Michael Cassidy from the Commonwealth Institute for Fiscal Analysis. Virginians across the Commonwealth work hard and deserve a fair wage. There is nowhere in the Commonwealth where the current minimum wage is reasonable to pay the bills of even a childless adult. So this bill is an important step toward changing that. When we look at the demographics, about half of all working people who will see a raise under boosting the minimum wage are white. The erosion of the federal minimum wage since 1968, however, has particularly disadvantaged workers of color. Poverty rates for Black and Latino workers would be almost 20% lower had the minimum wage maintained its purchasing power and been adjusted for inflation since '68. So this is a huge step towards doing that. The effect of raising the minimum wage is one of the most heavily studied topics in economics. Most recent studies that use the highest quality research designs that we have concluded that past increases in the minimum wage have little to no negative effect on employment levels. For example, in January 2019, the National Bureau of Economic Research put out a paper where economists studied 138 state-level changes in the minimum wage between 1979 and 2016 and found no negative employment effects even for increases in the minimum wage that were up to 55% of the state's median wages. So even in states that made serious jumps in that, this bill, because it phases in, doesn't get anywhere near that, and so it is comfortably within that body of research to show that there's no negative effects. So thank you for your time.
By the way, the state median wage is...
Senator Saslaw, I want to hear from the speakers, please.
Okay.
I'm sorry.
Good afternoon. I'm Alyssa Barron-Menza, Vice President of Business for a Fair Minimum Wage, a coalition of business owners and organizations. We support raising Virginia's minimum wage statewide to $15 as good for business, customers, and the economy. Our Virginia members include retail shops, restaurants, service businesses, and more. Workers are also customers. Raising the minimum wage boosts sales as workers buy goods and services they could not afford before. As the owner of Glamastique Hair Studio in Norfolk says, I need people to be able to get their hair done without deciding between that and basics like food. Low pay typically means high employee turnover. Raising the minimum wage saves businesses money in lower turnover, reduced hiring and training costs, and increased productivity. Employees often make the difference between repeat customers or lost customers. As the owner of Bits and Pixels in Richmond says, paying better wages has given us lower turnover, better customer service, and increased revenue. The U.S. Women's Chamber of Commerce joins us in support. Their CEO says it will help small businesses like my members by increasing consumer spending and strengthening Virginia's workforce. Thank you.
Thank you. Next speaker.
Buenas tardes.
Good afternoon.
Mi nombre es Elvira Gutiérrez. Soy miembro activo de CASA
My name is Elvira Miendez, a member of CASA.
y soy residente de Prince William desde hace 13 años.
I'm a resident of Prince William for 13 years.
Trabajo en Executive Plus, una empresa de limpieza de casas
I
ocupadas
work at Executive Plus at a cleaning company.
que es exclusivamente con detalles
Our focus is exclusively in minor details.
para personas militares y trabajadores de gobierno
We
exclusivamente.
work with military personnel and folks that work for the government.
Y hasta el día de hoy vengo representando a todas las personas que trabajamos en limpieza,
And to this day, I'm still representing all the workers that work in the cleaning industry.
ya que no ganamos ni siquiera $10 la hora,
Now, we don't even get $10 an hour.
no tenemos ningún beneficio laboral.
We have no benefits.
Queremos que no seamos excluidos y tengamos su apoyo en la propuesta SB7
We don't want to be excluded. We want to be included. I hope you can support SB7. Thank you.
y podamos ganar el incremento de $15 la
And
hora.
we can come to an agreement with increase to the minimum wage.
Necesitamos para darle una mejor calidad de vida a nuestras familias
We need this to give a better life to our family
y a una mejor educación a nuestros hijos,
and a better education to our family.
ya que ellos son el futuro de esta gran nación. Gracias por escuchar.
Now, they're the future of this great nation. Thank you.
Thank you. Next speaker. You're down to 1 minute, 25 seconds.
Hi, my name is Shantae Mills. I'm here representing all the home care workers throughout Virginia. We only make $9.44 an hour. There are home care workers who have worked 20 and 30 years. They have no benefits, no pension. They have no paid sick days, no holidays, and no vacation. So we do support the substitute.
Thank you.
Thank you.
1 minute, 5 seconds, 4 seconds.
Madam Chairman, I'm Pat Shipley. I am here today with the Virginia Interfaith Center for Public Policy. As people of faith, we believe that governments have a responsibility to develop sound fiscal policies that provide for the economic life of individuals, including employment that provides adequate income. We urge you to accept that responsibility today and to raise the minimum wage so that every family in Virginia is able to find employment that provides a living wage.
Thank you. The next speaker is just your name and who you represent.
Alexis Rogers, Care in Action. We'd like to see some slight improvements, which I think Senator McClellan's working with Senator Sazal on to make sure all domestic workers are included. Thank you so much.
Dana.
Dana with the Virginia Poverty Law Center. We support the previous comments.
Thank you.
Matt Simmons, owner and president of Capitol Hill House in Fest Beer Garden.
Thank you very much. Now we'll hear from the speakers on the other side. And be mindful of your time.
Madam Chair, Jody Roth.
7 minutes for 70 people. Please be brief and be mindful that there are others behind you who might want to make a statement that might be just slightly different from yours.
Yes, ma'am.
Thank you.
Madam Chair, members of the committee, Jody Roth on behalf of Virginia Retail Federation and a Coalition for a Strong Virginia Economy, which represents 26 business organizations. We have a longstanding policy of opposing this measure or any mandate on business. And I would just like to point out that according to the Virginia Employment Commission, 1.3% of the workforce is at the minimum wage rate, and 58.6% of them are 16 to 25 years old. This measure disregards that employers will reduce hours, cut part-time jobs, and not hire entry-level work without skill. It also ignores the border state competition for labor, and a lot of our business owners, their budget year is already done, and with an effective date of July, this would be very difficult for them to refigure their numbers for 2020 as well. I have a couple of members here who would like to speak on how that's going to affect their business.
Down to 5 minutes.
Good afternoon. My name is Steve Rosser. I own an ice cream company right here in Richmond, and I'm going to give you a peek inside my company. I bought it in 2010 as a one-store operation. We now have 6 stores. We were $500,000 in revenue. We're now up to a little over $5 million in revenue. This would not happen without wonderful employees. It would not. I have right now 102 employees. 23 of them are full-time. The balance are part-time. My full-time employees make an average of $16 an hour. The benefits they get add another $4.50. My full-time employees are well compensated, and they need to be. They're awesome. I have 75, 16 to 17-year-old kids that work in the retail stores that serve ice cream. They make an average of $8.20. We have a tip jar right by the cash register. And if service is great, guess what people do? They drop a couple of bucks in the tip jar. We have to report all that income. That is averaging $2 an hour for the 16 and 17-year-olds. They make $10.20 an hour. Now, if this bill passes and we get to $15 an hour, the financial effect is $385,000 in my part-time workers. It's $108,000 my full-time people, because I have to raise their pay too. I can't pay an ice cream maker $18 if a 16-year-old that's never had a job gets $15.
The people standing behind you are beginning to hyperventilate. You're down to 4 minutes.
Yes, ma'am. The total effect of this on my company is $575,000. For a $5 million company, that's a big deal. I can't grow anymore. So I ask that you be sensible, think through the exemptions, and let's make sure that we pay people well, but we don't stifle business. Thank you.
Thank you. A little less than 4 minutes left.
Thank you for your time. Our company provides jobs for over 180 people in this community. Our wages are nowhere near minimum wage, but minimum wages will drive up the wages of our entry-level people, which will drive up the wages of our next folks. Every dollar that's increased on this would cost us an additional $374,000. The $5 increment would cost us $1.8 million. It's money that would be taken away from the benefits that we already pay for them and they enjoy. Free enterprise and our ability to just do the right thing for our employees are already taking care of it. And so we beseech you to consider the financial impact that this will have for businesses. Write in a check for that when employees are already getting benefits and not getting minimum wage will be devastating. Appreciate your consideration on this.
Madam Chair, I didn't catch your name or the business.
My name is Norman Way,
you
Vice
stop the
President
clock,
of
please?
Puritan Cleaners.
Okay. Okay, you can start.
Madam Chairwoman, Nicole Riley with NFIB represents about 6,000 small business owners. Some of the concerns that you are hearing today, some of them are being addressed in Senator Marsden's substitute, so we hope that you would look at that very thoughtfully. But our biggest concern is the cost, and you'll hear from additional ones that will address some of those concerns.
Thank you.
Hi, I'm Hermie Sadler, excuse me, from Emporia, Virginia. Appreciate the time to speak. We operate convenience stores and truck stops in Southside, Virginia. 15 locations, about 205 employees. Proud to say that none of our 205 employees that have been with us at least a year make less than $10 an hour. And I'm not sure about Alexandria or Fairfax or Virginia Beach or Norfolk, but in Emporia and Jarrett and Skippers and other places like that, $10 an hour plus benefits is a good wage. The problem potentially for us is how a minimum wage would impact the rest of our pay scale in our company. It would be very detrimental to us in our area to absorb those fees. So I asked you to consider maybe a training period or something for new employees that we can get people in, get them up to speed, get them trained so they're ready to go to work day one, and or some of the other things that have been discussed, like the diversity in our state as far as incomes and those type of things. And I appreciate your time. Thank you.
Thank you, Herman. Next speaker.
Hi, my name is Shirley Johnson. I'm owner and operator of Leesburg Animal Park in Leesburg, Virginia. My husband and I have been in business for almost 40 years between our location in Reston and Leesburg. We started out with hiring many young people for the first time. It was their first time job in many cases. And so I would ask that you oppose this because I honestly feel like I wouldn't be standing here if we had high minimum wage in place at that time. I don't think a lot of startups are going to happen in Virginia. Thank you.
Thank you so much.
Good afternoon, Chairman and members of the committee. I'm Joyce Waugh with the Roanoke Regional Chamber. I also represent the chambers in Western Virginia called Virginia West Coalition. $15 in our region is far different from Richmond or other places, and this would be a very detrimental to our businesses, most of whom are very small. In fact, 95% or more are small businesses. So we oppose this from that perspective, and we appreciate your consideration today.
Thank you. We have 30 seconds left. Could you please give me your name and tell me which organization you represent?
My name is Don Bright. I'm president of Meharon River Forest Products in Alberta, Virginia. That's in Southside, Virginia. This proposal of $15 would eliminate 34 jobs at our company that currently employs 120 people. And I just want to caution you all with that.
I gave the other side just about 30 seconds. Just give me your name.
Madam Chair, Brett Bassey, President and CEO of Virginia Manufacturers Association. I implore you to look at the issue of total compensation, not just wage.
Thank you. Your name and the organization you represent?
I'm Lisa McSherry. I own 2 small businesses in the Richmond area, and I ask you to please consider this bill. All of the small businesses in this area will not stay open at a minimum wage of 15.
Thank you.
We all would like to see an increase, but the amount of that increase would not allow us to stay in business. Thank you for your time.
I'm trying to accommodate everybody, but nobody's paying any attention to the rules. Just your name and who you represent. I'm getting off the mic.
Hobie Bowen, Virginia Poultry Federation.
Thank you.
Jim Trapinski, Fleetwood Homes of Rocky Mount.
Thank you.
Owen Matthews, Kings Dominion, employs 2,100 employees between the ages of 16 and 20.
Yes, Senator Norman has a question of you.
How many employees did you say?
So Kings Dominion has 3,500 seasonal employees. That doesn't include part-time or full-time, seasonal.
Madam Chairman, have you tried to do a takeoff on what a $1 an hour increase would mean?
$1 an hour for us would probably be a 10% increase in operating expenses for wages. So,
Madam Chairman, do you have a number?
That would be well over, every dollar is probably between $1.2 and $1.5 million for Kings Dominion.
Thank you, Madam Chairman. The reason I ask is I represent Busch Gardens.
Yeah, it's a fine place, sir.
Thank you. Name and the organization you represent. Tell me whether or not you support the bill or.
Yes, Eric Rising with the Virginia Chamber of Commerce, and
you oppose the bill?
We oppose and hope we'll consider a few of the other provisions from Senator Marston's bill
Thank
and
you.
others. Thanks.
Hello, Sarah Pitkin with Pitkin's Home Center, Ace Hardware Stores, and the Virginia Retail Merchants Association.
And you oppose this
We
bill?
oppose the bill.
Thank you.
Hi, Beck Stanley for the Virginia Agribusiness Council. We oppose this legislation.
Thank you.
Harry Ragsdale with Marco's Pizza. This is a job killer. This is a horrible decision. Virginia has constantly been voted as one of the best states in the country for business, and you will all have it on your hands when this passes. This is
So you
horrible.
oppose the bill?
100%.
Thank you.
Parker Slabaugh, the Virginia Food Industry Association. We employ 55,000 people here at 530 retail grocery locations. We're opposed to the bill.
Thank you.
Robert Melvin with the Virginia Restaurant, Lodging, and Travel Association. We also oppose the bill.
Thank you.
Madam Chair,
Senator Spruill.
speaking to the bill.
Senator Spruill.
Take class thought chair. Madam Chair, I'm listening very carefully. They all are saying that $15 will break the bank. It's not $15 first year. Senator Slassar made a compromise. We're starting next year with $10, then a year afterwards. So they acting like they're gonna do $15 right now. And all these businesses that you have right now, that you are saying they're gonna break your business, most of you been in business for 20 and 25 years, you're still going on. How do you give your employees a raise? When did you do it? Busch Garden and Kingdom, you're making a damn killing. So I keep this, so that's the first point. The second point I want to get you to understand, all black people are not poor. They keep saying about minority, look at me. I don't have as quite much of what this young man got, but almost. So all of us are not poor. So we're talking about everybody. We're talking about everybody get a fair shake, everybody. So those who are talking about business about this, you're not going to be shutting down, is that you have not said to me, it'd been nice if you have said, I can't do $15, but I can do 25 cents. I can't do 15, but I can do 75 cents. You have not said what you could do. All you're concerned about is robbing the poor folks, black and white, by the way. So my question is this, is that since last I got a good bill, I'm going to support it. If you out of business, then you out of business.
Senator Lewis.
Madam Chair, just speaking briefly to Senator Saslaw's bill, I support the minimum wage, raising the minimum wage. I support raising the minimum wage substantially. I think most of us here on this dais do. I support the march towards $15 an hour. I really do. But nothing in that list that Senator Marsden enumerated at the outset as a potential substitute for Senator Saslaw's bill is pulled out of thin air. Every state that has passed a minimum wage increase, substantial minimum wage increase, has had one or more of those provisions in it. Absolutely. They are not something that has been pulled, from our forehead. The only thing that is a little bit different is something that Senator Marsden and I discussed, and that is we are a very diverse Commonwealth. And in case you haven't noticed, $15 an hour in Fairfax and $15 an hour in Buckingham and Buchanan and Northampton are very, very different things. And we have to recognize that. And other states have recognized that in the form of a regional minimum wage. It is a pain in the neck. Business community hates it. But it is very fair in very diverse states with very diverse economies. And so I will tell you that if we don't at least consider all those safeguards, guardrails, and particularly the enactment clause regarding a VEDP directive to tell us, look at regional minimum wages and tell us how and if we can implement them in Virginia, I think the consequences of this could be very dire. And so again, I would implore the committee to consider all those policy choices we enumerated that have been adopted by many other states, many of whom are marching towards the $15 an hour wage because they make sense. A naked march to $15 an hour without some or all of those safeguards is just not going to work.
Madam Chairman.
Before I go back to the patron, Senator Marsden.
Well, I'll let the patron, and then I have a motion.
Okay, back to you, Senator Saslaw. We're dealing with that.
Senators Lewis and Senator Mason suggested that they'd be more amenable to it if it was January 1st starting January 1st instead of July 1st. Is that correct? Okay.
I like that either.
No, I don't have a problem with that. It gives a year for them to adjust to that. With respect to what Senator Marsden has offered up, the only one that I agree would be to have VDEP study the regional impacts as it grows, okay, as the wage grows, to see if there's a way that it can be done regionally. But I am not in favor of halting this thing at $11.75 or $12 an hour because they're going to offer up some fringe benefits. If you do that, you're going to be back, some people will be back here in another 15, 20 years trying to get the minimum wage above $11.75 an hour because everybody's going to be claiming, well, I've done this, I've done that, and therefore the wage stays the way it is. I think that's a mistake. The other thing, when you look at the multiplier effect, these people are going to be paying taxes. You heard that, in some of these other states, it had no impact at all, job or employment-wise, because in most of those states, it wasn't more than 55% of the median income. In Virginia, the median income is $62,500 plus, okay? In January 1st, 2026, 2,080 hours times $15 an hour would be about $31,000 a year, which means that 6 years from now, it still won't be half the median wage in Virginia. So I don't think we're doing anything out of the ordinary by doing what we're doing, Dave. And, the regional thing, I have no problem with that being studied, but we got an income. My biggest fear of our way of life is the widening gulf that we're seeing in this country, and I don't think anybody can deny that, between the haves and the have-nots. We got to do something about that, okay? And, the people who've known me all the years that I've been here, I consider myself as pro-business as anybody up there. And I've run a business that grew pretty large. But we're going to have to do something to help these, to bring people up above $7.25 an hour. Isn't going to cut it. And right now, there seems to be no impetus to raise the federal minimum wage. So,
Senator Sassler, I think you may have a little help up here. Senator, your name just disappeared from my screen.
I'm sorry.
Senator Marsden, your
Thank
name
you.
just disappeared from the screen. Senator Marsden.
Thank you.
And then Senator Norman.
Thank you, Madam Chair. Nobody wants an increase in the minimum wage more than I do. I've been working on this for 6 years. 6 years. I know this is your first foray into the minimum wage increase, but at the same time, I've had an opportunity over 6 years to talk to people in the business community, people in the, who are suffering under low wages. And the thing that I want to have happen here is something that works. Something that works for everybody. And the thing is, I know you're concerned that the minimum wage would stop at 11 to 75, but next year we can come back here and determine just exactly what kind of benefits we will permit to take you that last mile to $15 an hour. We can determine that. It's not that somebody's going to throw some crappy thing with a $5,000 or a skinny medical plan, what have you. We can control that. The 6-year rollout, I think, gives industry a time to make sure that happens. So I have a motion.
well, before you do that, I want you.
No, hold
Okay.
up. Hold up, everybody. Before we do that, I have two names on my screen. Senator Norman, Senator Newman, then we're going to go back to Senator Saslaw, and then a motion.
Madam Chairman, the first bullet point observation I would make is that sometimes close elections can cause political epiphanies. Second point is that Senator Lewis mentioned about regional diversity. For 10 years, I represented the Eastern Shore of Virginia. Northampton County is one of the poorest counties in Virginia. The largest employer at that time was the hospital. They don't have a tax base to be absorbing this. I asked the gentleman, third bullet, the gentleman who talked about King's Dominion. The area I represent's economy is predicated on tourism. In 3 localities, there are over 31,000 people that are employed in the tourism industry. One of the biggest is Busch Gardens. Busch Garden, you heard what he said about $1, 1.1. 25 cents an hour does almost the same thing to Busch Gardens. And the only carve-out you have down here is you have to be less than 18 years old, a full-time enrolled student, and you can't work more than 20 hours a week. It is absolutely going to have an adverse impact on the tourism economy in Virginia, and we are not Fairfax.
Senator Newman.
Madam Chair, I'll yield to Senator Saslaw, and then I'd like to speak to a motion that's coming.
Senator Saslaw.
Yeah, there's several minimum wage bills in here, as you know. I've been here a long time, a real long time. I'm looking over here now at the people who oppose this bill. At no time in the 45 sessions that I've been here, have any of the people in opposition to this bill ever come in and requested us raise the minimum wage 2 cents. Not a one of them, okay? And I would maintain to you, if we had no minimum wage bills in this year, they wouldn't be back here today telling us we need to do something about the minimum wage. I can assure you, you want to wait until they say, geez, we like something like this, and I love you all, you've been good friends, but before that event happens, you might want to check the temperature in hell, okay? I just, I think we've more than bent over. This thing is a 6-year slide. It would start, with the suggestion, January 1st. It would slide, it would be 6 years before it got to $15 an hour. And you're telling me that somebody who works full-time, 6 years from now, shouldn't make $30,000 a year? That is absolutely ludicrous. All right, 31, Tommy. All right.
Senator Saxelot.
I saw you with it.
Senator Newman, just yield to you, Senator Marsden, for a motion.
Thank you. And my motion would be to insert, in my version of this, insert my A and replace Senator Saslaw's A through G, and then add the enactment clause, which is the regionalization study that the senator is in favor of. And again, the bill does several things. Once this my version hits at 1175, we can determine exactly what the benefits that would be allowed to be calculated against the cash amount of $15, and that it would allow for a training wage, which I think would ameliorate a little bit the situation at King's Dominion for people at 320 hours. It's about 2 months. It directs the VEDP to study the impact of a regional minimum wage, and the Commission of Labor and Industry can halt an increase of the minimum wage if the state sees negative job growth as measured by federal factors. I do not want this minimum wage, which is so desperately needed, to be a suicide
Senator
pact.
Marsden, I'm
and
sorry.
I so move that those things and.
Okay, Senator Marsden, I am going to need the clerk to verify for us all of what you just said.
Okay.
So, Tom, if you could please tell us what those amendments are that he's just suggested.
Are they separate? I have a question. Are they separate or are they all as a block?
Senator Marsden,
Excuse me, ma'am.
your motion is all in one block, right?
All in one block. Yes, ma'am.
I would be opposed to that then, and I would hope you all would vote it down.
Senator Newman.
Senator Marsden, would you mind separating those motions? If we don't get the first one, the second one is so desperately important also that I wonder if we could not vote on both.
Yes, there was a lot in what.
If we could bifurcate that, I'm fine with that.
What's the first?
Okay, Senator Spruill, and then I'm going to need the attorney to clarify for us what that bifurcated motion is.
Thank you. Madam Chair, to Senator Marsden, the 1125, that over 1 year period, 2 year period, when does that take place?
Senator Spruill, the 1175 would come into place 2 years from, the third increase would be to 1175.
So what is
in
the
this,
first?
so we've got a lot of
Senator
time.
What is the first increase?
I believe the first is 975.
And then what would the second one be? What would the second increase would be?
I believe, I'm not looking at the bill, I believe it then goes to 1075.
Okay, we had a second to that motion, but I still need the attorney to clarify for us what the bifurcated motion is. Tom.
Thank you, Madam Chair. Senator Marsden is proposing that removing the sections raising the wage in Senator Saslaw's bills and inserting the sections raising the wage in his bills, which take it to $9.75 on July 1, 2021, or excuse me, July 1, 2020, and on July 1, 2021, taking it $10.75, and July 1, 2022, taking it to $11.75, and thereafter going up $1, but allowing folks to count health benefits. He's also proposing to insert his provision on training wages, which is in subsection B of his substitute. And then the third would be the VEDP review of the impact on instituting a regional minimum wage.
The third one is the only one that I would agree to. I would agree to a training minimum wage if it's only 30 days.
Madam Chair.
But the rest of them, I would hope you all would reject.
Senator Newman.
Just a point of order, Tom, I think what we're saying with the bifurcation, that's all, your first two would be in the first motion, and the last one, which is the enactment clause, would be in the second vote.
That's correct.
What are you voting on? What's the first one?
The first
What does
two-
that include?
Tom?
It's replacing Senator Sasol's bill with Senator Marston's bill.
I would hope you all would vote against that.
Okay, you've had a motion and a second. It's not a voice vote. This is going to be a recorded vote. All in favor of the motion as made by Senator Marston, please vote aye. Nays have the same right.
This is the first one, right?
This is the first one.
Ayes 7, nays 8.
Strike the board, please. Clerk, we can open the roll.
Ayes 8, noes 6.
Okay, that motion passes. And the second part of the motion, which Senator Saslaw does not like?
No, we does like.
Okay.
No,
Madam Chairman, would they,
Senator-
just for
Senator Norman.
knuckleheads like me, would they explain the second motion, what it is again?
Am I correct, from the attorney, am I correct that Senate Finance is requesting this bill now?
Yes, ma'am.
I'm going to need a motion.
Madam Chair,
Madam Chair.
question?
Motion about the PEDP, the enactment clause. That's a separate motion, and I move the enactment clause as proposed.
Madam Chair?
Senator, I didn't get a second.
Second.
Okay, it's been moved and properly second.
The
Now,
second motion, the regional study?
yes.
And then the enactment, would that be a third
The
one?
enactment is an enactment.
Okay, thank you. Thank you very much.
You're very welcome. Senator, now we have a motion and a second. Senator Spruill.
Madam Chair, so, this the one that you're talking about doing the study? This the one? Now we on there?
For the
Now-
regional study, yes.
And Mr. Chairman, so I want to figure out of all these years that they've been taking advantage of the poor people, all kind of folks, for all these years, why you doing a study? Because you're robbing the folks already. Why you going to do a study on that? It's just delaying the time. You're already robbing folks. Why you going to do a study?
Okay, we have a motion before us, and I'm going, this is, I need that motion to be amended because it does need to go up to finance. Okay, this is going to put the enactment clause on the bill, so,
I don't have a problem with what regional is.
right. Okay, we're gonna get a recorded vote on this, Senator Saslaw, and then we're gonna get a motion on the bill. So all in favor, am I correct, Tom? Yes. Okay. All in favor of the regional study? Does everybody understand it that way? Vote yes or no.
Ayes 13, noes 1.
Now, what's the vote? Okay, so that passes. Now we need to incorporate the bills, which includes Senator Locke's Senate Bill 73, Senator Marcy's Senate Bill 816,
And
and now Senator Marston's Senate Bill 81, all rolled into your Senate Bill 7, Senator Saslaw.
Okay.
All right.
Second.
It's been moved and properly second that all those bills be incorporated and that the entire package be re-referred to Senate Finance. Is that correct? Or is that going to be second motion? Let's do the incorporation first. All in favor of the first motion, please vote aye.
It's just rolling them in.
That's just rolling them together. Now, I
Ayes
need,
14, noes 1.
now, Senator Norman moves. Senator Spruill seconds.
No, ma'am, I do not second.
Oh, the bill got to go to finance. The bill is seconded by Senator Mason, that the bill be re-referred to Senate Finance. Senator Newman.
Madam Chair, it's speaking to the motion.
Senator Newman.
Madam Chair, I know that Senator Sasslaw didn't want part of that on there, and he was okay with the other part. But I have serious concerns about what this is going to do on a regional basis if we don't come back here tomorrow, next year, and do something about this. Senator Sasslaw has been one of the most pro-business people in this legislature, and Dick, I appreciate that. This bill, I know there's a great desire for it, but if we end up not changing this bill next year, it could have a devastating impact on the rest of the state. It will not impact your area, Dick. I understand there's probably very few people that are not making $11.75 plus benefits today. But this bill could end up devastating communities that you've never heard of. You don't know where Brookneal, Virginia is. I can tell you that. You probably don't know where Alta Vista is. You don't understand where Lebanon is. But these areas are struggling for jobs like you would not believe. And you're imposing a Northern Virginia rate on the rest of the state. We happen to be fortunate in our area that we've got a lot of call centers. I don't know how we got them. I'm delighted we do. People go to those jobs. They get paid $9, $10 an hour. They're renting the buildings. They can come and go anywhere they want to go. This bill is going to determine that they go somewhere south of Virginia. Madam Chairman, I think it's well-intentioned, and maybe it's a outgrowth of the fact that we've not made tweaks, as Senator Spruill has indicated. But if we don't come back and make a regional differential, we're going to destroy jobs all over Virginia. And I know that's not the intent by far of the patron, but I cannot vote for this. I'm hoping that before we get through this, that we will consider regionalism now, because I don't think Lynchburg, Roanoke, Bristol, a lot of your areas can actually deal with this tomorrow. So, Madam Chairman, that's why I'm going to vote no today. I'd like to see us talk about regionalism earlier, but I know it's going to go to finance. We'll get one more crack at that apple. Thank you.
Okay, we have a motion before us.
Madam Chair.
Yes, Senator Deeds.
Just briefly, I don't live in Northern Virginia. I live, probably in one of the lowest wage areas of the Commonwealth. But, the Sheets, for example, in Lexington, the Sheets on 64 at the Fishersville exit, advertises they hire people at $10.50 minimum wage. We can afford to do better by our working people. That's why I'm going to vote for this bill.
We still have a motion before us. Any other member of the committee choose to speak? Senator Obenchain?
And I don't want to dwell upon the points that have already been made, but every action has a contrary reaction. And Senator Deeds is right that some of the local employers are raising the minimum wage to $13 or $14. I even heard that Target in the Valley had raised the minimum wage to $15 an hour. And we had one of my paralegals has a child who works at Target, came home, said, this is outstanding. I've gotten a raise to $15 an hour. Was very excited about it. Came home the next week, said my hours were cut by 20%. And I'm actually making less now than I was making before we got the raise. Some of the folks who stood up to briefly identify their concerns about this represent Virginia's #1 industry. That's the agriculture and forestry industry. And Senator Newman is exactly right that without taking into account different sectors of the economy in Virginia, different regions of Virginia, it's going to have a dramatic impact. And I'm not going to say that all aspects of forestry or agriculture can't handle it, but there are a lot that can't. And I would associate myself with Senator Newman's comments and say that we really need to be very careful in imposing this on all sectors of the economy in Virginia and all regions in Virginia.
Senator Serval and then Senator Norman.
Speaking to the bill. Thank you, Madam Chairman. I would say a couple of things. First of all, nobody should assume that everybody in Northern Virginia is making $15 an hour. I went to Audubon Estates Trailer Park in my district about a month ago and met with about 40 of my Latino constituents, one of which told me she was working at McDonald's making $8 an hour on Route 1. And I also just finished a pro bono case I was handling for a home health care worker who was making $10 an hour raising a single child in Fairfax County. I don't know how she was doing it, but she was, and I got her child support. But there's a lot of people in Northern Virginia that aren't making minimum $15 an hour. But the other thing I would just say to the committee is that it's important to remember that this is a process, and this is just the beginning of the process. And by the time we're out of here on March 8th, my guess is all of us will vote on minimum wage bills probably 4, 5, 6, 7, maybe even 10 times between the floor amendments and things going back and forth and conference reports and everything else. And I think it's important that we hear everybody's feedback, and that feedback's taken into account as this bill moves through the process. But if you want to see a scary bill, wait till you see the one coming from the other side.
Senator Eben?
Yes, Madam Chair. I just wanted to echo something that Senator Surville said. I sat in a room with close to 100 of my constituents in a neighborhood called Chiralago or Arlandria in Alexandria a few months ago. And they wanted to talk to me about several issues. One of them, the largest issue in their mind was the minimum wage. I asked them to raise their hands how many people earned less than $15 an hour, nearly everyone. I asked how many of them earn the minimum wage now. This is in Alexandria, Arlington, and some were driving from Prince William every day, and the rest raised their hands. There was next to no one earning more than what's contemplated in this bill. And they are trying to live in Northern Virginia. One woman told me she was working 14-hour shifts so she could get a neighbor to care for her child. So this really will go a long way in a lot of people's lives.
Thank you. If the clerk could clear my screen or refresh the screen, I'd see if there are any more speakers.
Senator Norman wants to speak.
Senator Norman?
I've been listening to the discussion and categorizing a lot of it in my mind, Madam Chairman, on a regional basis. And if you look at the composition of this committee, there are a significant number from Northern Virginia. There's Senator Lewis, who is from the eastern shore of Virginia. Senator Deeds from out in Bath County. Unfortunately, one of the very silent voices that's not on this committee and before it is Southside Virginia, which is under enormous fiscal stress because of the collapse of various industries and as they're trying to revitalize their area. And it's unfortunate we have not been able to hear from that part of Virginia because I can assure you where they would come down on this issue.
Madam
Okay,
Chairman.
Senator Saslaw.
I heard what Senator Norman said. There are 6 members on this committee from Northern Virginia. That's 40% of the committee. And yeah, Tommy, 6% of 40% of 15, I believe, is 6. At least it was when I came in the door. Planning District 8, which is what we encompass, is just with a shade south of 40% of the population in Virginia now. So we're not out of whack, okay? And you see these numbers because that's where the population's growing. And if we never put in a minimum wage bill to increase this, and we waited for the federal government to do it, I think everybody knows in here that 100 years from now, it would still be $7.25 an hour. And because nobody over there is ever going to do that. And I remember 2 years ago when I think Dave Marsden put in a bill for, it was $8 an hour, $9 an hour. I joked to Tommy that why don't you and I next year put in a minimum wage bill, raising it to $7.26 an hour, effective January 1st, 2050, and see if the same crowd comes in here and opposes it. And more than likely, they would. So this is something we need to do. When you've got 2 of the wealthiest people in this country telling you you've got a terrible disparity problem, they should not be ignored. So I would hope that we get the ball rolling today by moving this forward as amended.
The motion before us is to report the bill and re-refer it to Senate Finance. This will be an electronic vote. All in favor of that motion, please signify by voting aye. Nays are same right. Close the roll.
Ayes 12, noes 3.
Ayes 12, noes 3. The bill is reported and re-referred to Senate Finance, and Senator Sadler, you can have your seat back.
Good job, Louise. Well, you've had a day of it,
I've had a day. I'm gonna sleep well tonight.
Way to go, Jeff. We've done 2 bills.
Yeah, now, I'm going to let the prevailing winds and they finish their dividing. I got an announcement to make, so I'm going to carry by for the week the prevailing wage and the fair share bill, because otherwise we probably won't get out of here till tomorrow morning sometime. So we'll bring that up. Those 2 bills will be first on the agenda next week. So we're going to have a long session. Can you announce outside the prevailing wage and fair share, or have them announce it? So if anybody's waiting, they won't. All right. Okay. Okay, Serval. Check. Okay. Open it. Scott, where's Scott? Where'd he go? You want to do the open-end credit, or you want to carry it till next week? Is it? That was one of the ones wrapped in. Okay. All right. Okay, so 37 and 38, Scott.
Mr. Chairman, members of the committee, are we ready or need a minute? Mr. Chairman, members of the committee, the first bill we have is Senate Bill 424, which was reported from the subcommittee. Are we doing that one today? That was Senator Barker's subcommittee. We testified on this, I believe, 3 times.
Senator Barker, you want to report?
I did tell her.
Yeah, 424. Yeah.
Or do you want me? I'm happy to take them up in whatever order y'all want.
Madam Chair. Mr. Yeah, Mr. Chairman, Senate Bill 424, which has proposed to be rolled in, Senate Bill 573 from Senator Donovan, deals with the cost sharing and rebates as it relates to pharmacy benefit managers and those issues. We spent an extraordinary amount of time over 2 meetings dealing with pharmacy benefit manager issues. And in the end, the subcommittee did recommend reporting on a 2-0 vote with 1 abstention. I was the 1 abstention because I was trying to encourage people to keep working on some of these issues and hopefully get a consensus in terms of what could be more acceptable to everybody. And with that, I'll make a motion to recommend.
I second that.
All right. Wait. First, I need to roll Senator Donovan's bill into Senator DeSteff's bill. And so I will move that first. Senator Donovan, Senate Bill 573 rolled into Senate Bill 424.
Senator Sasslaw?
I made a motion to roll Senate Bill 573 into Senate Bill 424.
What's it, 526?
573. into 424.
Record your vote. Senator DeSalle, you're up.
Madam Chair, members of the committee, I'm sorry, Mr. Chair, members of the committee, been a long day. What this does is basically takes discounts and coupons from the manufacturer down to the end consumer at an 80-20 split. So the consumer will get 80%, the PBM will get 20%, and it's not limited to 80%. So in some cases today, the PBMs allow up to 99%. It starts at an 80-20 split and allows the PBMs to do business however they're doing it today, so it wouldn't actually hurt anyone. We had extensive hearings on this on both sides, and I'm not sure if you want to hear everything again or how you're going to structure it, but that's pretty much what the bill does. It's very simple, very easy. We follow the federal guidelines with the 80-20 split.
Speak in favor of the bill? Chris?
Chris White, Vector Corporation, here on behalf of Pharma. We support the bill.
Dr. Harry Gawanter for Virginia Society of Rheumatologists, and we support this bill.
Okay.
Mr. Chair, members of the committee, we had pharmacists, we had a whole slew of them before. We don't have all of them, but we've got the PBMs again, so.
All right.
I don't know how much time you want to give them, but.
Sure. Good evening, Mr. Chairman. My name is Scott Woods. I am with the Pharmaceutical Care Management Association.
Because it was in subcommittee.
The National Trade Association for Pharmacy Benefit Managers. We oppose the bill. Unfortunately, this bill will do nothing to reduce drug costs in the Commonwealth of Virginia. Drug manufacturers set the prices of their products. PBMs negotiate drug rebates with manufacturers to bring down the cost of medicines for consumers. The federal government tried this initiative earlier this year. The White House considered a massive regulation that would have passed on rebates to the point of sale. Medicare found, its own actuaries found that it would actually increase premiums by $50 billion. So the federal government pulled that regulation, and we would urge the committee to vote against the bill.
Just give a yes or no against the bill. It's been in subcommittee.
Mr. Chairman, I'm Doug Gray on behalf of the Virginia Association of Health Plans, and we're against the bill. This is Javier.
Okay.
Good morning,
Quickly.
committee. Good afternoon, committee. Good afternoon, Chairman. I would just recommend that the committee look into the conclusions of the ICER report that was done on this. ICER, for those of you that aren't familiar, is the Institute of Clinical and Economic Review. This is the gold standard for every P&T, which selects drugs to a formulary, and they take into account first and foremost the clinical efficacy of the drug, whether it works or it doesn't, and then the money piece. So this really limits the negotiation power of the P&T and the health plans, and I'd like the committee to consider the recommendations of this because it is nonpartisan and independent.
Okay, you're
and so
against
for
the bill.
me, I'm sorry, sir?
You're against the bill.
I'm against the bill because I
Okay.
think it needs to be 100% passed through first before you get to those stages. Maybe next year or the year after, once there is some good outcomes, we can discuss
Thank
that,
you.
yes.
There's a recommendation that came from the subcommittee.
Mr. Chairman, members of the committee, Jill Hankin from the Virginia Poverty Law Center. I spoke in favor of this bill in subcommittee, and I will do so today. I think that consumers need lots of help meeting these high deductibles of their health plans, and if there's a benefit being provided, even behind the scenes, that's something that should count towards the consumer's deductible. Thank you.
Senator Barker?
Yes, although I was not one of the ones that voted for this, on behalf of the subcommittee which recommended reporting the bill, I would move that we report, and does this need to go to finance?
All right,
And
it's been,
refer
okay,
to
it's been
finance.
requested by the Finance Committee, Tom? Okay. All right, the motion, if you're going to vote for the bill, is to report and refer to the Senate Finance Committee. All right, the bill's before you.
Will report.
Second.
Refer.
It's report and refer.
Second.
Okay, there's a motion to report and a second to report and refer to Senate Finance. All those in favor say yes or vote yes. All those opposed vote no.
Ayes 6, nays 9.
All right, the bill fails to report. Senator DeStaff, do you have another bill?
Chair, members of the committee, I have Senate Bill 480, Covenants to Compete, Low-Wage Employees Civil Penalty.
Was this before any? Yeah, he did. Hold on.
And
Covenants not to compete. Okay.
Mr. Chair, what this bill does is it prohibits an employer from entering into and enforcing threatening enforcement of a covenant to compete between the employer and low-wage employees. The employer is subject to a $10,000 per violation penalty. And what basically happens, Mr. Chairman, members of the committee, interns, students, apprenticeship trainees who have low wages are forced into signing non-competes with their employers. And the employers are actually threatening them. So this basically allows anyone in that category to, again, low-wage employees, not to be forced to sign a non-compete. And this bill was brought up last year. I believe it passed the Senate last year. It was Senator Wagner's bill. And we're pushing this forward again this year. Again, the civil penalty on this is $10,000. Thank you very much. I'm happy to answer any questions.
I would move to report when it's appropriate.
Mr. Chair, I'd ask a question first, if I could.
Sheriff, some deeds.
Is this the same bill that Senator Wagner had?
A variation of that.
Okay, what's different from the bill we had last year then?
I don't know completely off the top of my head, but I believe it went through the Senate last year and it died in the House.
Well, I'm just trying to find out if there's a difference between this and what we voted on last year.
Yeah, I don't believe there's a difference, Mr. Chair.
Okay.
I've not done a side-by-side comparison, though.
All right. This was not in subcommittee, was it?
This was not in subcommittee.
Right, okay. Is there
Well,
any,
Mr. Chair, could I ask staff if there are differences between the two bills? One last year and this year? This bill?
Mr. Chairman, if you give me 1 minute, I can do that.
Okay.
Mr. Chairman, Senator Deeds, it is identical as the bill that passed the Senate, identical to the bill that passed the Senate other than the year. Instead of July 1, 2019, it's July 1, 2020.
Okay, thank you.
all right.
Thank you.
Those who wish to speak in favor of the bill? Anybody speak in opposition to the bill? All right, there's a motion to
Mr. Chairman.
report. Is there a second?
Second.
Okay. Discussion?
Yeah, Mr. Chairman.
Senator Ovechany.
All I want to say is that with this $10,000 civil fine in there, this is a minimum wage increase for labor and employment lawyers across Virginia. We're going to have small employers who are easily going to run afoul of this.
Okay, all right. There's been a motion and a second to report. Those in favor vote aye. Aye. Those opposed, nay.
I don't know. Look out for the lawyers.
Mr. Chairman, members of the committee, thank you very much.
That's 14 knows one.
All right.
Never let it be said.
Do you have, because you not got a bunch of people.
No, I really, not right now. Hold on. Do you have a subcommittee report you want to make? Okay. Huh? Parker's done? No. All right, George, we'll go with George first and then you. Okay. George, why don't you finish your subdivision report?
All right,
Subcommittee.
Senator McClellan's bills, Senate Bill 732. And what I would do is first move to roll Senator Hanger's Senate Bill 598 and Senator Edwards' 226 into Senate Bill 732.
Okay, hold on. Hanger's bill and who else's?
Edwards, Senate Bill 226.
226. Okay. Oh, and 598, yeah, I got 598. Okay. All right, Senator McClellan, you're up.
Yes, so Senate Bill 732 would create a state-based health insurance exchange that would be known as the Virginia Exchange. As you recall, when the Affordable Care Act passed, states were given the option to either establish their own healthcare exchange marketplace or to default to the federal marketplace. Virginia defaulted to the federal marketplace. And I think after several years of seeing how the federal marketplace has operated, particularly in the past few years, comparing to other states that have run their own, and also looking at states that have switched from a federal exchange to a state exchange, we've seen that by establishing our own exchange, we can control costs better, work to improve the quality of care, and partner with insurance companies to better meet the health coverage needs of Virginians purchasing coverage on their own. We can also monitor who is enrolling, and particularly who may be enrolled in Medicaid 1 year, fall out of eligibility but be eligible for the marketplace, make sure they get enrolled, do a better job of marketing to people who are eligible for the exchange, and that's the bill.
Okay.
Did the subcommittee have a recommendation?
That's what I was going to ask, Senator.
Yes, the subcommittee recommends reporting with the substitute, and you have the substitutes just passed out just now. And just to give you a little perspective on this situation over time, during the McDonald administration, as the Affordable Care Act was coming in, had been passed and was getting ready to be implemented, there was Secretary Health and Human Resource Secretary Hazel had worked with an extensive group of stakeholders on things. This was one of the issues they looked at, and the governor ended up waiting until sort of the last minute before deciding how to proceed, and then partly because there wasn't complete information as to a health insurance exchange as it's operated by a state at that time. He opted to go with the federal program with an indication that we might change later, and that's what this is proposed right now, is to have us take over that responsibility rather than having it continue indefinitely with the federal government.
Move to report.
Mr. Chairman, substitute motion that we roll the bills together.
Yeah, we have to make a substitute motion first to roll 226 and 598 into 732. All those in favor, vote aye. Okay. Okay. All right, the motion on this bill to report it will have to go to Finance Committee.
So moved.
Move to report and re-refer. It's been moved and seconded the bill be reported and referred to Finance Committee. All those in favor vote aye. All opposed, nay. Okay, the bill is reported.
Thank you. I have another one if you want me to do.
Is it in Senator Barker's subcommittee?
No.
All right, let's hold off.
All right.
All right. Senator Barker, what else?
The other bill that we acted on was Senate Bill 251 from Senator Edwards. That was a broader bill than the one from Senators DeSteph and Donovan as it related to pharmacy benefit managers. We had extensive discussion on this over 2 different meetings, and we also rolled into Senator Edwards 251, Senator Edwards 252, and Senator Pillion's 862 were rolled into it. And so I would, at this point,
rolled into what?
Rolled into Senate Bill 251.
Okay. All right, it's been moved to roll in Senator Pillion's bill. And who else's?
And another bill from Senator Edwards, which is 252.
252, all into 251.
Right.
All right, all those in favor of doing just that, rolling those bills in, vote aye. Where's Senator Edwards?
Right here.
All right, you want to present your bill?
All right, and just by way of background on this, the subcommittee did recommend reporting with a substitute, which has just been distributed on a 2-0 vote. I abstained because I felt although some progress had been made among the parties, that we weren't there fully yet. So if this should go forward at this point, would hope there would be further working on this particular bill. The recommendation of the subcommittee was to report. Yeah. Right. And, well, I think, yeah. We first.
Well,
First-
there's currently a motion
first-
here, you may not have to talk.
Yeah.
It was in subcommittee, so, 252. Yeah. All right, Senate Bill 251. All those in favor of reporting 251, vote aye. Those opposed, no.
How do I vote here? Okay. Vote for it.
I got you.
No, because it went before the subcommittee, and the subcommittee recommended it be reported.
Ayes 9, no 6.
Let's keep this train rolling. All right.
I have another one.
Senator Barker, you got another report?
Medigap? No, I don't. The
Okay.
Medigap bill?
Hold on.
250?
Let's, rather than do, let's take some of the people that have been sitting here, okay? Yeah, I want to do that. All right, Senator Boysko, you want to come up? Yes, I'm sure it is. No.
Thank you very much. I have two bills for you today. First is SB 6660, an update to the Virginia Equal Pay Act.
Always on the base of the motion. Yeah, it's very moving. What's a protected class?
I would suggest, Mr. Chair, that you put this bill in a subcommittee.
That's a big bill, Mr. Chairman.
What the hell's a protected class?
Licenses, pharmaceutical benefit management. I can read it if you want me to. Sure. It took a long time.
Mr. Chair, to answer your question, what is the protected class under this bill? And protected class is defined in this bill, and it means a group of people distinguished by race, color, religion, national origin, sex, pregnancy, childbirth or related medical conditions, age, marital status, sexual orientation, gender identity, disability, or status as a veteran.
Yes, sir. This is the fifth year I've carried this bill. Sure. So, 1974, we have the Virginia Equal Pay Act. We now know that there are specific things, there are holes in it where individuals are not receiving equal pay for equal work still. And so this bill would disallow firing a worker if they share their salary information. It would require employers offer information about advancement opportunities to all employees. It would eliminate basing your pay on salary history. And it provides for some measures for giving an employee subject to the violation the right of action, which I'm very flexible on and talking. I've been working with stakeholders who have expressed concerns about that. I'm very open to having a conversation. I've brought some people from the American Association of University Women and the Women's Law Center. Would love to have them just speak up if you wouldn't mind.
Mr. Chair, I think that, I mean, anybody that's here ought to be able to talk. We've waited this long, we may as well wait all night. But there's significant legal issues raised in this bill, and I would suggest that this bill go to courts where there's a civil law subcommittee that could take it up and give it the time it deserves. Because I'm just not sure that at almost 7 o'clock, we're actually going to get that, we're going to be able to give the bill the time it deserves tonight. I so move.
Motion is that it be referred, not reported and referred to Senate courts. All those in favor say aye.
Aye.
You need to record it? All right, recorded vote.
All righty,
Okay.
ready?
Ayes 14, noes 1.
Ready for the next bill? This is SB 662, Employee Misclassification, Retaliatory Actions Prohibited. And this is a bill that I'm carrying on behalf of the administration. I have Dr. Megan Healy is here with me. This bill prohibits employees from discharging, disciplining, threatening, discriminating against, or penalizing an employee or an independent contractor because the employee or independent contractor reported or plans to report worker misclassification. According to a 2012 Joint Legislative Audit, a JLARC report, over 20 states have specific laws to combat worker misclassification. Additional 15 of states have task forces on the same purpose. Once again, I have Dr. Megan Healy here and hope it's the pleasure of the committee to report this out. This is an administration bill.
Take mine up next. Is mine on the thing for today? All right, let mine come by for today. Go ahead.
Hi, I'm Megan Healy, Chief Workforce Development Advisor to Governor Ralph Northam. This is part of a larger packet. We have a cause of action for misclassification, and we also have another misclassification bill that's going through finance, or actually you guys voted on it today, that talks about debarment, civil penalties, as well as making sure that the IRS tax code is what is defined as misclassification.
Okay, anyone here in opposition to the bill? All right, bill's before us.
Second.
All right, it's been moved and second that Senate Bill 662 be reported. All those in favor vote aye, or opposed nay. All right.
Thank you.
Ayes 12, noes 3.
All right. Senator Favola.
Thank you, Mr. Chairman. I have two bills before you, and the other two bills are sort of my Senate Bill 180, I believe, is going to be rolled into yours, Senate Bill 8, if you want to take care of that housekeeping.
That went by for the day.
Okay, well, that was, yeah, right, your prevailing wage. And then I have Senate Bill 172, and that's balanced billing, and that I expect will go by for the day. Senator Barker has a bill that also deals with balanced billing in a different way.
Was yours in the subcommittee?
Mine was in the subcommittee.
Was it Senator Barker's? Yes. Okay, go ahead and give a report.
No, they were in the subcommittee, but
We're
going to.
We're still working
We're
this-
working on trying to resolve.
Yeah, the
differences
stakeholders
between
are
the
still
two.
working together.
So,
Maybe.
We'd like to pass both bills by for the day.
All right, so that's 5 for the day.
Yeah, so the two before you, Senate Bill 95, which is very, very easy. It's essential benefits bill. And what it does is it, in statute, ties our essential benefits, which in this case would be prevention and primary care. And the prevention and primary care services are identified by the Federal Center for Disease Control and and HRSA, the Health Resources and Services Administration. We articulate that these benefits are tied to the January 1, 2019 Affordable Care Act, which is an important thing, I think, to have in statute. What this bill does do, which you may want to care about, is it would require all insurance plans to cover these essential benefits, including the short-term plans and the association plans. Now, under the Affordable Care Act, there is no copay for the standard insurance plans, but the Bureau of Insurance tells me there may be a copay under the short-term plan option. We think this makes common sense. It's good health, it's good practice, and it's something that I think you should all support. So I don't think I have a speaker.
Lauren Schmidt on behalf of the Virginia chapter of the American Academy of Pediatrics. We do support this bill. Essential health benefits are critical for children. A lot of times these include preventative well child visits, vaccines, and sometimes parents don't realize that these skinny plans don't include that. So we do support this bill.
Mr. Chairman, Doug Gray, on behalf of the Virginia Association of Health Plans, we rise to oppose the bill. Where it includes short-term on line 208 ought to be removed. Short-term plans are not designed to be essential health benefit plans. They're designed to be a short-term solution for people who have lost their job, maybe found another, and have a 60-day waiting period at their new job. So to add that rich benefit to it, which, by the way, gets richer every day, every session, because the essential health benefit keeps having things added to it, really would basically ruin the offering of short-term plans. I do not have many members who offer them. I have two at the moment, but adding them to the essential health benefit would
Senator Marsden.
be a big impact.
Doug, explain how COBRA, fits into this equation.
So COBRA doesn't really apply in this situation. What COBRA is really a continuation of a full benefit, and it wouldn't be affected either way by this bill. What this bill does is apply essential health benefits to appropriately to association health plans, MEWAs, and to the regular market, which they all apply to today, and we're in the bills that you've passed on association health plans and MEWAs. So all those are fine. With the short-term plan, it's really going to have a big impact on that offering. The offering won't be made anymore, most likely. And so that's why it's not a good idea.
All right. Nicole?
Mr. Chairman, members of the committee, Nicole Riley. We also have the exact same concerns for my small business owners, particularly those who are self-insured. Short-term policies are an option for them, and that the whole benefit of not having the essential health benefits is it actually does open up to potentially wider networks. It does cover those issues that they need, and so we would just ask that it not apply to the short term. So, thank you.
Okay, you all have heard this.
Very, very briefly, I'd wanted to ask the senator, what kind of benefits would we find under your bill that we might not find today?
That you might not find today. Well, for the short-term plans, you would find things like children's immunization, maternal and child health.
Under your bill?
Baby well visits, yes. And there are very few short-term plans actually even operating in Virginia, so it's not like there's going to be an incredible and immediate impact. We just think it's good business. The reason why the standard insurance plans cover this is because it costs you less to keep people well than to let them get sick. And the short-term plans can exist as long as 3 years now under the new Trump regulations.
All right, Senator Newman.
Mr. Chairman, I move that on line 209, after including little I, that we strike the term short-term. And speaking of that motion, it is something that is a tool that's used rarely, but when it's necessary, it's an important bridge. I would hope we would strike that 2 words.
It's been moved and seconded that strike the line, what's it, 209? Strike the word short-term. 95. Okay. All those in favor of amending Senate Bill 95, striking the word short-term on line 209, say aye. Aye. Opposed? All right. Chairs in doubt. Record the vote.
Ayes 9, nays 6.
All right, bills before us as amended.
Mr. Chairman, a question to the bill.
Pardon?
A question to the patron about the bill. As you know, under the Hobby Lobby Act or decision, there was some ability for religious exemptions for certain things. Has your bill incorporated any of those items that could have been knocked out under the Hobby Lobby Act? In other words, in particular, are there abortion services in here that a closely held company would be required to keep, or is this not in your bill?
No, there are no
Okay.
abortion
Thank you,
services
ma'am.
included
Thank
in
you.
this. Okay.
Okay, bills before us as amended.
As
It has
amended.
been moved and seconded that the bill be reported. All those in favor, record your vote aye, or opposed nay.
Ayes 14, noes 1.
Bills reported. Senator
Okay.
Pavola.
Second bill is Senate Bill 481. There is a substitute, and then I have one change in addition to the substitute. You don't have the substitute. We had a note. Would you like me to take it by for the day, or? Okay.
Yes.
No worries.
Chairman.
I guess, Mr. Chairman, I will have to take this by for the day. We had, I don't know what happened. We thought we had requested a substitute but staff doesn't have one ready, so, but, is that okay?
Yes.
Okay,
Second.
thank you.
All right. Senator Locke.
You have to vote on that, Mr. Chairman? Do you have to vote on that?
Oh. I
Take it back for the
thought you
day?
said take it by for the day.
Yes.
All right, without objection, it's by for the day. You're just visiting, all right. Senator
We got
McClellan?
Hatchman.
Where's, I can't see you. Come on up. Senator Hashmi?
Good afternoon, Mr. Chair and committee members. Just speaking to SB 411, I request that we pass it by for the year. We're having some conversations with the administration as well as other stakeholders and want to refine the language on SB 411.
Okay. All right, all those in favor, without objection, then, I don't think we have to record it. We did, you do? All right. Those in favor of carrying it over for the year, vote aye.
Ayes 15, noes 0.
Thank you. The second bill is SB 404, and this focuses on placing a limitation on the maximum length of time for short-term limited duration health care plans and limiting those STLDs to 3 months so that they're only effective for 3 months. And it speaks a little bit to the issues that Senator Favola was just addressing. So just again, to give a brief background, short-term limited STLD insurance is primarily designed to cover those gaps that occur when an individual is transitioning from one plan of coverage to another plan, and it's exempt from the ACA, and so it's not subject to the ACA provisions and protections that usually apply to the individual health insurance coverage. And so, as you probably recall, in 2018, the final rule expanded the access to STLDs for up to 3 years, and we're seeking to return it to no longer than 3 months. The Virginia Code doesn't require that STLDs cover prescription drugs or maternity or mental health or substance abuse disorder benefits, and most of them are sold by out-of-state associations, and so they don't have to comply with Virginia coverage mandates and thus can leave a significant gap in coverage and exposure to financial and health risk. And so we're seeking to return the limit to 3 months, no longer than 3 months in this bill. There is an amendment to, I'm sorry, I didn't bring that up initially, and the amendment sought to remove Section D from there, removing the limitations on the short-term plans so that which would have made it impossible for the plans to exist at all in the Commonwealth. So the intent of the bill is to set up guardrails, but also to make these STLDs still an option for Virginians.
One second, Senator Deeds, if you will. Mr. Chairman, Senator Hashmi, you all sent me 3 amendments.
The only amendment that I have is the removal of Section D.
I believe they.
You said B?
Section D, yes.
B or D as in
D
dog?
as in dog.
D as in dog, okay. All right. The bill is before us as.
Mr. Chairman.
Oh, you have people waiting to speak, I'm sorry.
We have not agreed to the amendment either. I'm not even sure if the amendment's right.
Okay. That was removing lines 32 through 37. Huh?
Mr. Chairman, Senator Hashmi, there are 3 amendments in line, and I believe a couple of these came maybe from the Bureau of Insurance through the administration. Line 22, introduced after 144.103, insert except as described in subsection B. On line 26, introduced after extended, insert notwithstanding 38.2, 3514.2. And then, as mentioned, strike the text of subsection D, but insert any certificate delivered in the Commonwealth that is issued under a short-term limited duration medical plan in any other jurisdiction shall comply with the requirements of this section.
Can you explain the first 2 that were code numbers?
The first 2, the federal definition of short-term limited duration medical plan talks about up to a year, and you can extend up to 36 years. Since we're referencing the federal definition, we're saying except where we're using the federal definition except where we are different. On line 26, I believe
85% of their money on paying.
I'd have to ask the Bureau that. I can't recall the reason for that. But line 32 is just saying those issued in other states have to require by the provisions of this act for folks in this
I
jurisdiction.
thought D was deleted.
Sorry, I didn't hear.
It was. We added.
Oh.
It's delivered in this Commonwealth, issued in another jurisdiction, it has to comply with our requirements.
You guys want to answer your question, Mr. Chairman?
All right. Have we voted on these amendments yet?
No.
We have not. Okay, you heard the amendments. All those in favor of them adopting those amendments, say aye.
Aye.
Opposed? Okay. Those who wish to speak in favor of the bill, come forward and hit the 5-minute. Try to be brief.
Good evening, Mr. Chair, members of the committee. I'm Freddie Mejia with the Commonwealth Institute, and I'm here in support of SB 404 to impose limitations on short-term limited duration plans. There is space for these plans. As we heard earlier, these are a bridge, but by no means should they be considered long-term options for folks and not as an alternative to comprehensive health coverage that can be accessed through the ACA marketplace. Just want to offer up a quick point to the point that a lot of these plans do not offer these essential health benefits. A study in 2018 in Richmond, Virginia, looked at 15 short-term limited duration products. None of them offered maternity services. 20% offered prescription drug coverage. Only 40% offered substance abuse coverage, and 73% offered mental health coverage. So, as I mentioned, this is a bridge for a long term. Thank you.
All right. Next.
Hi, good evening. My name is Awesta Starkash, and I'm the Government Affairs Manager for Small Business Majority, a national small business organization. I'll be brief and just say that protecting the individual marketplace is important to entrepreneurs because many self-employed individuals and small business employees rely on the marketplace to purchase coverage. A recent survey of small businesses small business owners in Virginia found that more than 2/3, that's 67%, support banning short-term insurance, which may not cover all essential health benefits and can exclude those with pre-existing conditions. These are our scientific third-party opinion polling, and for that reason, we support SB 404.
Good evening, Mr. Chairman. My name is Sarah Baylog with the Leukemia and Lymphoma Society. For all the reasons you've already heard, we also support SB 404 and thank Senator Hashmi for bringing it. In our world, we like to say that short-term limited duration plans are like a donut tire. So, you know, they're exactly what Mr. Gray described them as. They're designed to bridge a gap between two different periods of coverage. They are not a substitute for health insurance, and they should not be either sold to consumers as that or presented, you know, as an alternative to fully qualified health plans. So no rational person would put 4 donut tires on their car and go 90 miles an hour down the interstate, and that's essentially the situation we have now. So we strongly encourage you to limit these to what they are called, which is short-term and limited duration. Thank you.
Okay, thank you. Next.
Good evening, Mr. Chairman and members of the committee. Sarah Cariano, Virginia Poverty Law Center. I won't belabor the point. I think all the speakers as well as the patron have made it clearly. We also support Senate Bill 404. Thank you.
Okay.
Mr. Chairman, members of the committee, my name is Kelly Fitzgerald. I'm representing the American Cancer Society Cancer Action Network, and we strongly support this bill. Thank you.
Next. Doctor.
Hi, Dr. Harry Gawanter. I'm Advocacy Chair for the Virginia Chapter Arthritis Foundation, and from our perspective, these plans do not address the needs of people with arthritis or any other rheumatic disease or any other chronic illness for that matter, and for that reason we support this bill. Thank you.
Okay, is there a different point of view?
Yes. Mr. Chairman, Doug Gray on behalf of the Virginia Association of Health Plans. If you start on line 25, the limiting it to 3 months is clearly a goal of the legislation. Then on 26, renewal or extension is the second goal of the legislation. After that, we're starting to get into some things that, you know, frankly, don't deal with real life. The third provision says you can't have it twice within 12 months. Well, what if you're unlucky and you lose a job twice in 12 months? That doesn't really make a whole lot of sense. So that's the part on line 27, 28, and 29. And then C on line 30 says you can't buy it during an open enrollment period. Well, circumstances of life don't care about when the open enrollment period is. If you lose your job during an open enrollment period and you can't afford the ACA policy, this is your option. So it doesn't make sense to prohibit people from using the option just because of the time of year when they lost their job. So I would suggest to you that you should remove lines 27 through 31, and you still accomplish the basic purpose of the bill, which is to limit it to 3 months and make sure it can't be renewed.
Mr. Chairman, Nicole Raleigh with NFIB. We have serious concerns about this, and in fact would even oppose just moving forward with it, limiting it to just 3 months. For our small business owners, particularly those who are self-insured or doing startups, short-term policies are an option. Just to make it clear, these options typically are for people who do not qualify for subsidies in the exchange. And instead, they use these because the premiums tend to be lower, the deductibles tend to be lower, and despite characterizations that short-term policies do not cover or offer any type of coverage, they do cover things like cancer, heart, stroke, diabetes, labs, MRIs, PET scans, and just to name a few. The point is with the lower premium and also a lower deductible, they can pay things as they go towards that deductible. We think eliminating this or just shortening this to 3 months, you are leaving people out there who have had a plan. The state exchange is something that you're still considering. That won't be online for at least another probably 2 years. So if you're going to move forward, you know, you're potentially leaving people with no coverage for the next 2 years. Thank you.
Mr. Chairman, if I may, I just want to just briefly, on behalf of 2 cancer patients that I represent who were both in their 20s, who got blood cancer, who had these plans, because these plans aren't required to cover pre-existing conditions. One was a landscaper who presented with back pain in the ER. He had stage 4 lymphoma and spines running up his tumor, and his short-term plan disallowed coverage for his bone marrow transplant because he had sought chiropractic care for his back pain, and they said that was a pre-existing condition. So these plans are not robust. Capping them at 3 months is the best thing we can do.
Mr. Chair, I think this lady's already spoken once. We're late in the evening. Why don't I'll move to report the bill.
All right, there's a motion before us to report the bill. Is there a second?
Second.
Mr. Chairman.
Senator Newman, speaking to the motion.
Speaking of the motion, Mr. Chairman, I don't know exactly why we don't want people who can't afford insurance to get something that helps them. But that's exactly what this bill does. There are people out there that cannot afford your Cadillac plan, your Mercedes plan, or the BMW plan, and that is what is in the other plans. This plan at least allows them an opportunity to buy a plan they can afford. I don't know why we're going down this path. I would hope that we would not, but I'm going to vote no.
All right, bill's before us. It's been moved and seconded. All those in favor vote aye. Those opposed, no.
Ayes 8, noes 7.
Thank you,
Okay,
Mr.
bill
Chair.
is reported, 8 to
Thank you.
7. All right. Senator McClellan, you're up, and then Senator Suderline.
Okay, I have Senate Bill 719, which would eliminate the exclusion from the minimum wage for persons whose employment is covered by the Federal Fair Labor Standards Act of 1938 and persons whose earning capacity is impaired by physical deficiency, mental illness, or intellectual disability. This bill will help to provide protection for individuals with disabilities to be paid a fair and living wage. It also eliminates language from the code that is outdated and probably shouldn't be used anymore. I believe, yes, there's some folks here to speak in favor of it, and this was a bill that was requested by the Virginia Association of Supported Employment. Right on time.
Mr. Chair, I just want to clarify for me
Senator Deeds.
what that means on lines 49 and 50. Who exactly are you talking about again? You may have said it in the first place.
So I think these are the shelter workshops. Are these the same?
Yeah, they're the people that are earning supplemental.
Oh, go ahead.
Mr. Chairman, Senator Deeds, Becky Bowerson here with APSI. These are the people who work in what used to be called sheltered workshops where they make sub-minimum wage, very, very low wages. And they still have there's a federal certificate for this, but it's being phased out.
And Mr. Chair, that's what I was concerned about. I mean, the federal workshops in my area are going out of business anyway.
Yes.
So you're going to put them out of business?
No, there is up until 2024, and we're, that they would be permitted to maintain that, and hopefully by 2024, that will be gone. And if it's not, we would intend to keep it until the federal law has told them they have to expire that kind of employment.
Mr. Chairman. Over here.
Monty.
Senator McClellan, and how does this impact like the ARCs of Virginia versability? Is that who you're targeting with us?
Senator Mason, Mr. Chairman, Senator Mason, not anymore. In fact, Tanya Milling with the ARC was here, and then she had to leave early to support this bill. They don't do this anymore.
Mr. Chairman, so how do we exclude that? How are we, because there are a lot of people in spots that are operating at 20% of capability maybe. We're trying to pick people up, and we're trying to give them a place to go. And we've got phenomenal stories on the Virginia Peninsula about these. How do you make sure you're not damaging them?
Actually, Mr. Chairman, Senator Mason, we don't want to damage them. However, that type of employment setting is demeaning. It's not an employment first. Hang on. And the federal government is closing them down over time. What we would like to do, along with our partners in support of employment, is to work with transition programs to help those individuals. We don't want anybody to be out of work. On the other hand, we don't want them to be paid such little wage that it's not feasible for them to operate. And they can be employed at a higher minimum than sub-minimum wage.
Mr. Chairman.
Mr. Chairman, I would also say to Senator Mason that the Disability Law Center has been collecting data on these settings, and the number is decreasing at a fairly rapid rate. People who were involved in that earlier are no longer involved in that.
Mr. Chairman, I have a number of folks in my district that utilize these services, and it is what they do. They love it. And then I have a number of people come to me and say, we need more opportunities like this. These places work to transition people into the community that can, but there's a pretty significant segment of them that can never make it there. I mean, so a gentleman that we see around the building called me and wants everybody at minimum wage, everybody in the community, everybody to have the dignity association and not be demeaned. Some people can't get there. And we want to give every opportunity possible to the people that can, but the people that can't get there, I'm just worried with a bill like this, you're going to erase the opportunities that they enjoy and have today.
All right, Senator Newman.
Mr. Chairman, I can't say any better. I mean, those of you that have been around workshops know how critical it is. It's not about the money. If they did it, even if they didn't get paid, they go to these places. They have self-worth. It is fantastic. That's what it is. It's not bad. It's fantastic for these people. And if we're going to take and make that basically undoable, it's sad, and I don't think it's intended, but it's mean to these people. These people want to try to go to work. They're not accomplishing much out there, but they are at work. They're getting self-worth. I would hope we don't do this.
Mr. Chairman.
Mr. Chairman, again.
Hold on.
Okay, sorry.
Yeah.
Senator Overton.
And I don't want to belabor this, but we have dear friends whose daughter has participated in a workshop for years, and they are terrified about the prospect of shutting these workshops down. She doesn't do it for the income. She loves the people she works with. She loves having a place to go, having a place to belong. The money doesn't make any difference in the world to her. She can't accomplish many of the tasks in 10 times the time that many other people could accomplish the tasks. There's no economic argument. This is not, this is just wrong.
Yes, sir.
If I may, again, Dr. Harry Gawanter, speaking for myself and the father of a almost 35-year-old son with Down syndrome who works at the Richmond Marriott. He gets paid 50% of minimum wage, and he is operating at 100% capacity equal to everybody else. And I've not been able to have his income, his pay raised, even though I've talked with the company that has arranged this. Now, the other thing to remember is he also, because he has a disability, is he gets Medicare and Medicaid, and he is capped at how much money he can make unless he's going to lose his disability if he makes too much. So in fact, what we're doing by helping to raise his pay is minimizing how much Social Security he's being paid at the end of the month to make up for the difference. So and I'm sorry, but I just have to say, it's not these people. This is my son. But y'all use those terms, and I know it was unintentional, but I just remind you that these are people who happen to have differing abilities than us. And if they can do the work, they should be paid appropriately for the work. I don't think that it's a matter of putting them out of jobs. I think if they can do 70%, then they get paid 70%. If they can, get paid 100, then 100%.
Are you for this or against it?
I'm for this, thank you.
You're for the bill?
Yes.
Mr. Chairman.
Hold on, you've already spoken. Let's get some other people first here. Senator Searville, then Senator Evan, then Senator Bell, then Senator Mason.
So, Mr. Chairman, I have a almost constituent in my area who is general counsel for a large charity like this in DC area called Melwood. And she's a big advocate of this concept. And I know she doesn't think it's going to put these entities out of business, although I'm not really clear exactly how to square that with what everybody's saying. And I know in Fairfax County, they recently, they contract out certain services to these kinds of organizations, like computer recycling, I think, and some other stuff. And Service Source, which is in Northern Virginia, recently lost the contract because the county is not allowed to give these type of entities that employ disabled people a preference in the procurement process. And I almost put in a bill so they could give them a preference to enable more of these kinds of contracts to go out so they wouldn't be hurt by if the wages went up. But it seems to me that there's a couple different interrelated issues in this, including the procurement preference and this other stuff. And I noticed in looking at the board list, we have a Virginia board for people with disabilities, and it seems to me that they might be somebody that could study this and make recommendations to us on exactly how to square all this up for next session, because I think there's more moving parts than just the minimum wage piece. And so I don't know when the committee's going to feel done talking about it, but I feel like I have a sense of the committee. At some point, it seems to me that's what we ought to talk about.
Yeah, I think that's a great motion, but I just want to ask, make sure I got this right on this bill. We have an organization in my district where there are people paid much less money than minimum wage to do something like, say, stuff envelopes. And then if I had an organization stuffing envelopes with folks who weren't intellectually disabled, I could stuff, 500 envelopes an hour or 600. Maybe these other people can only stuff 50. Under this bill, Senator, or maybe your witnesses, we would require they be paid the same amount in order to lift up those other folks? Is that what you're saying?
So it is my understanding that what you described as a sheltered workshop, which is where you have a population that is not competitive, that is below the minimum wage, that is segregated from the general population to do a particular type of work, that those are being phased out by the federal government. And so this bill in our minimum wage law phases out the exemption by 2024, similar to what is happening at the federal level. So I think what we're trying to do here is first recognize that. And then second, where you have individuals with a disability who are functioning at 100% of capacity, the way our law is written, doing a job at 100% of capacity, the way our law is written, they're still exempted from the minimum wage, is make sure they have the ability to get the minimum wage.
All right. Senator Bell.
Thank you.
Sir, I just wanted to apologize profusely. If I said these people, I spend a significant amount of my time saying the exact same thing. So if I said that, I am sorry, sir. I apologize. I owe you better than that. I'm sorry.
What?
Yes, yes, I believe you're correct, yes, sir. Mm-hmm. 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 And working in an environment that is inclusive in the community, not sheltered.
At the same time, it's understanding that Social Security would affect the Social Security, am I right or not?
Yeah, I don't.
Mr. Chairman.
If he's being paid, if he's being paid, so if you're on disability, you can't work, at 100% capacity, and you get disability benefits under Social Security. So that's slightly different. But if you are able to work and you are no longer needing disability through Social Security because you are working full-time, then you are getting paid full-time. That's what he meant by that. Yes, yes.
Mr. Chairman, I have a motion that we carry the bill over to 2019, the letter from the chairman referring the matter to the, I'm sorry, 2021. Sorry. With a letter to the Virginia Board for People with Disabilities to come back and make recommendations to us about this and whether or not procurement preferences ought to be looked at as well.
All right, it's been moved and seconded, bill carried over to 2021 with a letter to
The Virginia Board for People with Disabilities.
All right, you heard the motion. All those in favor, will you vote aye? Those opposed, no.
Thank you.
That's 15-0.
Senator Sewerline, you're up. Senator Peake, you're next.
Yes, Mr. Chairman, I've got Senate Bill 613. I see council is, I don't know if they're getting the substitute or. So as, well, if you, the substitute should fix that concern. Can I just get a copy to make sure that it communicated through? There's all these folks that come speak in support of it now. That's great. Yeah, I think that what should be different on the substitute before you is, you should say no investor-owned public utility. If that's,
well
that's.
Give me an example of what you've seen that brought this bill forward.
Thank you, Mr. Chairman. So just on Friday, when I got home in Roanoke, I went to my mailbox and I opened up the mail. There's something with Appalachian Power's logo on it. And also on the front of the envelope, it said, important information enclosed. And then it had the postage, and that's all that was on the outside. And then you open it up, and then it says home serve, and then Appalachian Power. And then there's a letter that says information for Appalachian Power customers. And it goes on from there. And eventually, it tells you that your specific home is not covered. This is an optional program. And then at the very bottom of the regular text, it says for faster processing, visiting AP Electrical. So again, something that makes it look like it's from the utility. And then at the very bottom, it says HomeServe USA, and it's got a disclosure about how it's from this other company. A lot of folks have contacted me because they received it and they thought it was something from the utility. And so, I mean, that's the design. The company that's involved in this has, they've had actions taken in other states. That's partly why it's a little bit better, and it says this is optional and things like that. But it's because attorney generals in other states have pursued this. Because what these insurance companies do is they have relationships either with municipalities or with electric companies, someone that you're regularly getting mail from that you would open because you would expect it to be from them, and then you can contract with this other entity. And then either the locality or the utility then gets as I understand it, a cut of what of the money is.
Questions of the paper about
No, we don't, the substitute's not properly before us. Mr. Chair, I was going to move the substitute.
All right, second. All those in favor of adopting the substitute, say aye.
Aye.
Opposed? All right, the substitute is now before us.
And Mr. Chairman, Senator Sutherland, I believe Senator Sutherland would also like one additional change to what's in the substitute, where it's 3 changes, but the same one on lines 41, 42, and 43. Strike public and insert investor-owned. So read no investor-owned utilities shall.
Move the amendment, Mr. Chairman.
All right, you've heard the motion. All those in favor of adopting the amendment, say aye. Aye. All right, now the amendment has been approved, it's now part of the bill. Any questions? All right, those who, let's just do this thing. Those who support this endeavor, come forward. All right, I don't see a big rush. Don't have real warm and fuzzy feelings for this bill, please come forward.
Mr. Chair, I move we pass the bill by indefinitely.
Second. All right, there's been a motion, we've heard the motion to pass the bill by indefinitely. All those in favor say, record your vote aye. All right, what's your next bill?
It's in subcommittee. Is subcommittee meeting after this?
Yes.
All right, well, I'll see you then.
I'll bring
I'm sure
you
the
out of here.
same people that lined up are going to love that one too.
You won't be long, trust me.
Senator Pete, you're up.
Thank you,
Chair, I move
Mr.
we
Chairman.
PBI the bill.
I figured I was going to get the same fate, but I might do a little bit better. Senate Bill 192, and this involves physical therapists. It was brought to me by some physical therapists in Lynchburg and then the State Physical Therapy Association. The problem is the copay that they charge their patients under their insurance plans is based on special physicians or special treatment, and the copay is much higher. And so for physical therapists, the patients are getting, 6 months of treatment or 3 months of treatment 3 times a week. And those co-payments are very detrimental to the patients who are having to make them each time they visit the physical therapist. And I have someone here to speak on the bill. So I'm sorry, I do have an amendment. We did amend the statute. I think we took out osteopath. What do we, Tom?
Mr. Chairman, Mr. Chairman, Senator Peake, on line 20, strike physician or osteopath and insert primary care health provider.
Primary care health. Senator Deeds.
Move the amendment. All right, you've heard the amendment. Motion is second, adopt the amendment. All those in favor, say aye. Aye. Opposed? All right, amendment's adopted.
All right, thank you. Now I have someone to speak to the bill.
Yes, sir.
Yes, I'm Tom Bohannon. I'm a local physical therapist, and I represent the Virginia Physical Therapy Association. And I thank you for hearing this bill for us.
Sure.
The issue of copays reduction has been an issue for us on a federal and state level for quite a while now. Many insurance providers classify PTs as specialists versus a primary care provider. That specialist copay is a higher copay, and it's an approach that ignores the fact that physical therapists are often requires multiple visits, making seeing a PT cost prohibitive for most patients. We want to change that in Virginia by following a lead established by other states, starting in Kentucky in 2011. That limits physical therapy copays to no more than a copay visit for a primary care physician. Currently, 14 states have passed this legislation, and 8 more, including Virginia, have it on the dockets for this year. We're also following the lead of United Healthcare Insurance Corporation, data that shows significant reductions in early access to physical therapy. United Healthcare projects at least a 20% reduction in imaging, surgery, and injections in 2021 by waiving or reducing copays on a pilot study. This pilot study recently was rolled out to more states, including Virginia with United Healthcare of the Valley. We ask that you support SB 192 to help reduce costs and improve access to physical therapist services for Virginians.
Thank you.
Thank you.
Mr. Chairman?
Senator Marsden.
So my standard thing that I've experienced in policies is the primary physician charges $25 copay. When I go to a specialist like a, urologist or a cardiologist or whatever, it's $40. So you're saying that what they're doing is referring people to physical therapists and then charging the $40 for every visit? Is that
Yes,
pretty
sir,
much
that's
the-
exactly what's
the
happening.
idea? So not to denigrate anything here, but, I understand the fee going up for, very expensive doctors, but physical therapists, it is more of a multiple trip kind of thing, and we've got to get the costs so that people can actually do physical therapy. That's my understanding of the bill.
Yes, sir.
Thank you.
Exactly.
Senator Marsden has it. He got it. What he said.
Mr. Chairman, I'm Doug Gray on behalf of the Virginia Association of Health Plans. The challenge with this legislation is that it is micromanaging the plan design depending on what people can afford. I have a very rich benefit, so my $20 copay for my doctor's visit is the same as my $20 copay for up to 30 visits to the physical therapist. But here's the thing. Everybody doesn't have a rich benefit, and everybody can't afford a rich benefit. If you pass a bill like this, you're going to force us to drive the dollars into the premium to lower the copay. That's how it works. If you look at every plan, it's that way. Your copays are lower if you have a gold plan. They're higher if you have a bronze plan. Everybody can't afford a bronze plan. A gold plan. So that's the part of the challenge. This is also putting a square peg in a round hole. The way most plans are designed is you have site of care determining what type of payment there is. So if you're going to an office visit, you're going to get the lowest payment. If you're going to an outpatient facility, you're likely to get coinsurance because it's a more expensive site of care and, frankly, not the recommended site of care. We want them to go to the most efficient site of care, which is the office. Home care has a different set of approaches. So think of this like a Christmas tree. If you're in the therapy section of the benefit, you're going to want to be included in on this deal pretty darn quickly. So who else is in there? Well, there's physical therapy, there's occupational therapy, speech therapy, manipulation therapy, namely chiropractors, and cardiac rehab. So all those folks are going to want a Christmas tree on this. And when they do, you're going to add all of their extra costs into the benefit. So you're turning everything into a gold plan is what you're doing, which I have, and it's great for me, but it's not so great for the folks who can't afford it. So there are unintended consequences of managing plan design. For example, one thing could happen is the plans decide, you know what, all right, we'll just increase the doctor's visit. Maybe we'll make it 30 or 40. And then everybody will be on the same playing field. Great. Not what you intended. And that's the problem with this idea. It wasn't thought out, and it doesn't match reality, nor the plan designs. And what it does is micromanage the plan design. So I would suggest to you that the smart thing to do would be to study this over the year and make sure you don't create unintended consequences and, frankly, a Christmas tree. Thank you.
All right. You've heard everybody. Bills before us. Need a motion one way or another.
Mr. Chairman, isn't this something that Mark, I like the idea, but it seems like it's something we've sent to HERC in the past. It's not exactly a HERC item, but they do come back with the cost of such things, and it doesn't kill it, but it does study it. I would move that we pass by the bill indefinitely and send the information to HERC and request more information back, sir.
All right. The motion is to pass by indefinitely and send a letter from the committee to the HERC Commission requesting more information on this. But not as a mandated benefit. All those in favor of doing that, record your vote aye. Those opposed, no.
We're close.
All right.
Close.
13 noes,
All
too.
right.
We'll get them next
That's it.
time. Thank you.
Members of the committee, I know some of you may have some, did you want to discuss?
Mr. Chairman, I could do all my energy bills I got, and hope I can do it within 20 minutes if you allow me to.
Okay. Transmit.
20 minutes. All right.
Okay.
First of all, a couple of housekeeping, Mr. Chairman. Senate Bill 470 You want to strike that, please?
All right, you've heard the motion. All those in favor of striking Senate Bill 470, I assume Senator Reeves knows this, vote aye. All right,
Senate Bill 227, strike that, please.
Senate Bill what?
227.
Okay, that's yours. All those in favor of striking Senator Spruill's bill, record your vote aye.
And Mr. Chairman, the committee has a Senate Bill 504 with Senator Peterson's bill. That was amendment, but he got another amendment on the bill, Mr. Chairman. So I want to hear that from you, please. Substitute, Mr. Chairman, then 504, that carry over to the next meeting, please.
All right, for the day. All right, Senate Bill 828, I guess.
Then, have we already done 828?
Senator Lewis's.
That's done. Mr. Chairman, we can get to if y'all don't move, my subcommittee, we can do that right quick. To the Mills Committee, this is subcommittee report. Senate Bill 302 and Senate Bill 539 rolling to Senate Bill 794. This is the, do that one. Got one bill left, Mr. Chairman. Senate Bill 828, Senator Lewis bill. That was recommended by the committee.
Mr. Chairman,
Yes.
if you all can bear with me for a minute, I think we acted on that as the full committee.
That's right.
Yeah. I would like, having voted on the prevail, and I know it's late for this sort of gymnastics, but bear with me, and I'll try and walk us through it. Having voted on the prevailing side by which we adopted the amendments to 828, I move that we reconsider that vote.
Second.
Oh, okay.
I think they were.
Yeah.
Yeah, okay. Okay.
Clean energy.
Mr. Chairman, if this can take some time, Senator Lewis.
It shouldn't take any time at all. If we could just get a vote on that motion and.
So move.
Second.
So how does this four-line bill read now?
Mr. Chairman, if you reconsider the amendments, then it would be as it was introduced.
That's correct.
Which did not include sustainable biomass.
That's correct.
So lines 13 through 16 remain the same.
But we haven't voted yet.
Yeah, well, I mean, no, basically.
Motions.
All right, those in favor of reconsidering the amendments, he's already moved that, so all those in favor of reconsidering the vote by which we adopted the amendments to the bill, vote aye.
Aye.
Okay.
All right.
All right.
And now, Mr. Chairman, I would offer just as one word amendment on line 13, striking the word means from the original bill and putting includes.
Second.
Okay. All those in favor of adopting that amendment, say aye.
Aye.
Aye. All right.
Okay.
And now, Mr. Chairman, the bill's back in its original form, free of hitchhikers, and ready to move forward. And it says what it says.
Mr. Fines, Carver.
Move report.
Second. All right, so moved and second to report 828 as re-amended. Okay? All those in favor say aye. All right,
That's 13, knows one.
bill is reported.
Mr. Chairman, that's all I have on the subcommittee, on the bills.
Okay. All right, I need, I'm going to move that we send, at the request of Senator Locke, Senate Bill 917, add and help. All those in favor? Second. All those in favor, before you vote aye. All right, that bill's referred to add and help.
I'm sorry. There's a motion, request a response from Senator Locke, strike Senate Bill 1013. All those in favor, before you vote aye. All right, that bill is struck. All right, and or just refer. All right, and Senate Bill 1014, the motion will be simply to refer, not report and refer, 1014 to Senate Finance. Okay. All right, all those in favor of reporting and referring, vote aye. I'm just referring it, excuse me. Hold on.
Marston's tip wage.
Oh, yeah. All right, those in favor of striking Senate Bill, the motion is to strike Senate Bill 79. Is there a second? All right, there's a motion second to strike 79. All those in favor, say aye, or vote aye. Okay. That's it for now.
Probably administrative.
Well, let's, you know, it's kind of late. We got started late. Hopefully next week we won't. Any objection to?
Mr. Chairman, if the subcommittee, we'd be done in 20 minutes.
Oh, you want to still give it, you
Yes,
got your
sir.
subcommittee?
Yes, sir, we'll be done in 20 minutes.
Then go ahead. Oh, a subcommittee meeting. Okay.
Yes.
That's it. I know, but I've announced all the controversial bills that went by. No, this is his subcommittee.
Subcommittee.
Mr. Chairman, I don't want to slow this down because I want to get out of here as quickly as you all do.
All right,
I've got
hold on.
Senate Bill 855, and some people did come here.
All right,
Interested in that.
okay. We'll keep going.
Just that one.
What's the bill number?
The people those people aren't going to, from somewhere else.
Oh, there it is.
Oh, my God, all these.
Just got to notice that, so.
Yeah. So these people aren't going to be here any other time.
What'd you say?
They aren't going to be here any other time.
They're not going to talk. They're just here to watch. You ready, Mr. Chairman? Mr. Chairman, members of the committee, Senate Bill 855 establishes a new license and regulatory framework for small loans in the Commonwealth. These loans are important to a lot of our constituents, and they provide a means by which consumers can access credit across the spectrum. And I know we've already had that debate earlier with Senator Locke's bill. These loans are aimed at people with credit scores below 620, and the majority of American studies have shown that do not have enough savings for a $500 emergency and are in need of regulated options to help them. This bill seeks to establish a regulatory framework for these lenders. They are providing, these loans are unlicensed and unregulated now at the state level. This legislation is based on model legislation from the Council of State Governments to regulate these loans, which were used last year by more than 100,000 Virginians. This bill is not in conflict with several of the other bills we had. We are establishing a category and a new form of licensure for this product. I believe we got a substitute too.
Yeah, Mr. Chair, if I could ask the difference between the substitute and the original bill.
Good question, Senator Deeds. So the substitute changed the loan amount and dropped it down from $5,000 to $3,000 as was in the original bill. It reduces the caps, the substitute reduces the caps on the fees from about 0.88 to about 0.66. It adds an additional day to the borrower's right of rescission. And it requires lenders to provide and display a customer service phone number for borrowers. A borrower can only have one loan at a time. And it also makes certain that the loans have to be governed by the laws of the Commonwealth of Virginia. They can't have one of those clauses that says the loans are governed by the laws of some other state. So that's the essential changes in the substitute.
Mr.
Senator
Chairman.
Lewis,
Move the substitute.
let me ask you a
Second.
question.
Yeah, move the substitute.
Adopt the substitute.
Yes, sir,
All
Mr.
those
Chairman.
in favor of adopting the substitute, say aye.
Aye.
A few years ago, I made a loan to a relative to buy a car that was more than $5,000, so that would be prohibited by this bill?
This is small, actually, we've reduced the cap to $3,000.
So I couldn't make the loan even to a relative?
Well, you'd have to be a licensed lender. This establishes a new category of licensure, Bureau of Financial Institutions.
So what you're saying is, even to a family member, I couldn't make a loan?
I don't think this bill would not cover loans to family members, I don't think, Senator Sasslaw.
Mr. Chairman.
Oh, okay. All right.
Mr. Chairman.
Senator Servell.
Thank you. I have a couple questions for the patron. First of all, my understanding, just so I want to be clear about what we're voting on, is that I believe the APR that would be reflected when you take the fees coupled with the interest rate authorized by this bill is about 273%. Is that right?
That is correct.
Okay. The second, which is consistent with the car title lending we've passed. Second question, I'm looking for some kind of enforcement remedy in here about non-compliance. And I noticed, at least under the car title lending statute that Senator Sasslaw wrote or negotiated, violations for car title lending are punishable under the Virginia Consumer Protection Act. And I don't see any reference to the Virginia Consumer Protection Act in the original or in the sub, I don't think. I was curious, and I don't see, or for that matter, at least just flipping through it really quick, I don't see any kind of private right of action for a violation here. All I see is administrative complaints to the Bureau of Financial Institutions. Is there any provision in here that says that if any of these provisions are violated, somebody can sue?
Defer to my counsel.
Okay.
Mr. Chairman, Senator Serval, Nicole Brenner with Reed Smith on behalf of the Online Lenders Alliance. You're right, under payday and title, but not consumer finance, there's a specific add-on to the Consumer Protection Act. If you're reading the Consumer Protection Act on its own, it likely already applies, but there's an additional list of statutes that's not included here. That's not a problem if that's what we needed to do to alleviate your concerns.
Mr. Chairman, further question for Ms. Brenner.
Senator Serval.
Oh, I'm sorry. Madam Chair. Okay, I'm getting more confused. So the Virginia Consumer Protection Act has a specific exclusion for small loan companies. And given that this bill doesn't modify that exclusion or clarify it in any way and uses very similar terminology, it seems to me it's ripe for confusion. So is it the patron and or your all's intent for this to be covered by the Consumer Protection Act or excluded?
I'm saying based on my read of the Consumer Protection Act, it would have been included, but I'm happy to look at the exclusion that you're talking about.
But it's your intent to be included.
That was my read of it.
Got it. Okay. All right. Those are all my questions at this moment.
Mr. Chairman?
Senator Sproul.
So intent, so we could, to send to survey, you can put it in now, you just, going by what my word says. The intent, that don't mean nothing to me. Are we gonna put it in there what? I don't, no disrespect to a lawyer, but you know, you can't do that. So my question to the Senator Surveyor, did you mean to have them to put that in there, to have that protection?
Madam
Senator
Chairman, what I would say to Senator Sproul is that if this were to pass, I think it's absolutely critical that it be in there. And I think the Attorney General's office, which I think is waiting to speak, can probably talk about all the problems they've had with that small loan exclusion over the last 10 years. Including in Fairfax County Circuit Court, where I think there's been opinions about it. But so if the bill were to pass, I think it needs to be in there. But I'm not favorably disposed towards the bill, so I'm not sure where the committee's going with the bill. But if we were to pass it, it needs to be in.
Madam Chairman?
Senator Sproul.
I just can't see voting for it without putting it in there. I mean, you would have thought, Senator Lewis, you would be amenable to put that
That's
in there.
fine, absolutely.
Matt? Well, women, I'm to our lawyer.
Senator
so-
Sproul.
To the lawyer, do you have that, what he was talking about? Tom, what Senator Survey Scott was talking about, by putting that in there to make sure?
Thank you, Mr. Chairman. Senator Sproul, yeah, I think we just need to place a provision in 59.1-200 violating any provision of new chapter 22.1 of Title 6.2.
So, Mr. Chairman, I
Senator
move that.
Sproul.
I move that motion. I move that. So add it in there.
It's been moved and properly second that the amendment be agreed to. All in favor, please say aye.
Aye.
Noes have the same right.
Madam Chair,
Senator Dees.
I move the substitute as it's been amended be adopted.
The motion is that the substitute as amended be adopted. All in favor, please let it be known by aye.
Aye.
Nays have the same right.
Is that what I said also is in there? What you saying?
Yes,
Okay.
because we hadn't adopted a substitute.
Okay.
That's what worried me about it.
Okay, thank you.
Senator Lewis.
That's it, I think, Madam Chair.
Tom, so that's in there, right?
Yeah.
Okay, thank you.
Let's look at these.
Yeah. Madam Chair, Nicole Brenner with Reed Smith on behalf of the Online Lenders Alliance. I think you've heard a little bit about us tonight. We are the previously unlicensed part of the industry. So this is a bill that would put forward licensing and regulation on our industry. It's a similar model to what we operate under in other states. As Senator Lewis said, it is model legislation from the Council of State Governments. It's also a similar product that our members are licensed to offer in other states, but with all of the Virginia rules of the road that exist in other chapters. Two examples that I'll give you. Under the current Payday Act, on a $300 one-month loan, you would pay half of the fees under this product as you would under current Payday. And on a $500 12-month title loan, you would pay more than $200 less on this product. So we think it's a good option for consumers and would increase access to credit. Would appreciate your support. I believe we've talked to BFI. They have no issues, as well as the Consumer Finance Association represented by Jeff Smith, who I think you heard previously would like for us to stay in our own lane. So this is us doing that, and I'm happy to answer any questions about the product.
Any questions?
Yep, Mr.
Any
Chairman.
members? All right. Senator Servell.
And, you know, I'm just starting to focus on this because I finally have time with it in front of me to actually spend time reading it, but.
But it's been in your inbox for a little while.
It has. It has, and I appreciate the opportunity, but I've been kind of busy, but, Mr. Chairman, I would just note that the consumer protection, and then maybe Ms. Brenner can alleviate my concern, but the language we use for the consumer protection provisions in your bill are different from the language that are used in existing Virginia code for some of the other laws. So just for example, bear with me, in the motor vehicle, in the Car Title Act, we make it a prohibited practice. We say that in collecting or attempting to collect a motor vehicle title loan, licensee shall comply with the restrictions applicable to debt collectors in the FDCPA, the Fair Debt Collection Practices Act, regarding blah, blah, blah. Okay, and it specifically says if you're going to try and collect your debts, you have to comply with this. This bill on line, I guess, 320 something, right?
Seven.
Yeah, right around there, talks about the FDCPA, but it just says a licensee shall administer small loans in compliance with all these things, which to me is, language-wise, is different. And the way judges interpret statutes, if the legislature uses different words in different places, it's supposed to be interpreted differently. And so by not using parallel language in similar parts of the title, I have concerns about that. I mean, was there some reason you all didn't use some existing language in our code to come up with some of the consumer protections as opposed to using this model act?
Madam Chair, Senator Suravel, I think you would find that like 10 out of the 13 pages of this bill are Virginia law and are exactly what is used for payday title or consumer finance. There's actually, in my comparison, a lot of variations between those three chapters. And so I would say that is already the case for the regulated industries. But in that, I tried to use the one that made the most sense for the way that our members operate. And so we don't repossess vehicles. There's actually a prohibition in here against wage assignment, taking liens against personal property like car title. And these are fully unsecured loans. There's also a prohibition on ancillary products or any bounce check fees. And so if you're talking about Fair Debt Collection Practices Act, I think there's a reason that we have to operate differently because we're not repossessing a vehicle, but if there's a specific word that you wanted us to use instead, these federal laws are inserted here so that Virginia could also enforce them.
Mr. Chairman, for the question. So, and I appreciate it, but the FDCPA has a whole bouquet of prohibited practices. And the reason that you have to put an FDCPA provision in these statutes is because the FDCPA does not apply if you're collecting your own debt. And so you have to, that's why we have to do this by statute here. And the FDCPA goes beyond way more than just car titles. I mean, it says you can only call during certain hours. If somebody says they have counsel, you have to stop calling. You know, you can't call at employers. There's a whole series of things you can't do that beyond just car titles. So I'm concerned about the inconsistency in language. I'll just leave it at that.
Mr. Chairman, Senator Servo, is there a word you'd like better than compliance?
I'm sorry, Mr. Chairman, I would say that I like the language in the Car Title Act, which we just voted to repeal, I think.
Are you saying you'd like to reconsider that? Is there a section you want me to look at?
No, but if this were to move forward, I just think we need to try to focus on making the language consistent with the language, the consumer protections type language in our other statutes, if we choose to move forward.
Happy to be consistent with the language you repealed.
Okay.
Mr. Chairman, members of the committee, Dave Irvin with the Attorney General's office. I'm part of our consumer protection section. The Attorney General opposes this bill. Basically, the substitute bill permits open-end credit lenders to impose annual interest rates in excess of 270% on line of credit loans up to $3,000. We have three significant problems with the loan product. One, obviously, is the interest rate. Triple-digit interest rates are permitted. It basically allows interest rates that are similar to what existing law, payday loan law, and the title loan law allows. We have concerns about the size of the loan. We have concerns about that there is no limit to the term of the loan. Unlike existing, the payday loan law, the consumer finance law, the title loan law, those are closed-end credit loans. This is an open-end credit loan which can exist in perpetuity. We brought a chart that shows how much would be paid if you paid the minimum payment due over a 48-month period. If you got a $3,000 loan, you would pay back $15,000. If I can hand this, here we go. Bring her around.
With the minimum principal.
5% principal.
So we have concerns with the fact that there is no term limit. These can go in perpetuity like any other open-end credit loan or credit card. You can pay and pay. You can pay down. You can then get an additional advance. If you pay down, you can take out a new advance, which extends that, and it can go on forever. Like I'm sure many folks have had credit cards for years and years and years. That's part of the benefit to a credit card. The size of the loan permitted, it allows a line of credit loan of up to $3,000. The interest rate does not go down as the loan goes up. That's even different from existing title loan law. With title loan law, the interest rate goes down as the loan goes up. There are other problems concerning the mechanics of the legislation. Senator Surville has mentioned some. All of the other lending laws that we enforce are enforceable through the Virginia Consumer Protection Act. This statute does not reference the Consumer Protection Act. Using the word small loan law, it provides an exclusion to the Virginia Consumer Protection Act. It also provides the Attorney General, the existing language in this provision provides the Attorney General with authority to seek consumer damages but only if there is a willful and knowing violation. That is different, again, from all of the other consumer laws we enforce. We don't have to have a willful violation to be able to collect restitution for a consumer. To get to the bottom line, basically, if this is adopted, even though it's providing licensing and a rate cap where existing law doesn't have a rate cap, it essentially continues the open-end credit loophole that exists now. This is the loan model that everyone will go to. We continue to play whack-a-mole with the legislation that was passed earlier, and there is a conflict between that legislation and this legislation. They both deal with open-end credit plans. The earlier legislation provides a interest rate of allowing 36% plus a participation fee of $50. This basically takes that away or says, has an inconsistent plan saying that you can be licensed and charge 270%. So there are inconsistency. As I say, if we adopt this, whack-a-mole continues. We take away on the one hand, we give with the other, and this would allow basically those high interest rates to continue. This loan model doesn't provide the life preserver, it provides the anchor. I urge you to oppose the bill.
Mr. Chairman, a question for the Attorney General. Mr. Chairman. So, I was in your comments, you just highlighted another thing for me. So in line 420 through 432, which is the Attorney General relief section of the bill, okay?
All right.
I think you were sitting there when we just added an amendment saying this is all subject to the Consumer Protection Act. The Consumer Protection Act has a whole separate Attorney General, civil investigative order, civil relief piece of it. How do you square what the VCPA says about what the AG can do with this new section 6.2.2251 at line 420, given that this is a separate Attorney General relief provision? I mean, it seems to me, I don't know how you square the two. They're kind of trying both to do similar things, but they probably have different authorities and orders. And
yeah, they definitely do. For one, the Consumer Protection Act gives us the authority to seek civil penalties.
We need to move this along, okay? It's 10 after 8, and, wrap up what you're going to say.
I'm answering.
Scott, you don't have to ask a question every 2
Okay.
seconds. Hold off. All right. Let's get it moving, okay?
I've finished everything I was going to say. I was just
Okay.
trying to answer Senator
Sure.
Servell's question.
All right.
There is a difference between, obviously, there's an inconsistency between what the Virginia Consumer Protection Act allows and what these provisions allow in terms of restitution, civil penalties, et cetera. So if it's all in there, there's an inconsistency.
Okay, next.
Mr. Chairman and members, thank you. I'm Nick
Are you
Bork.
for or against the bill?
I oppose the bill. My name is
Okay.
Nick Bork. I'm from the Pew Charitable Trusts. We strongly oppose the bill for four main reasons. One, the charges allowed on this bill are, I think, fairly called unconscionable. A $3,000 loan, as you've heard, repaid over 48 months would have a borrower repaying over $15,000. I think it was suggested that this would be cheaper than a title loan. That's not true. One of these loans, $1,000, say if a borrower did manage to repay it in 1 year, the repayment on that would be $2,200 in fees, a total repayment of $3,200. That's more than title loans in Virginia today.
Okay.
Two, it authorizes a flat, high APR for small loans and keeps it flat for large loans up to $2,000 and $3,000. It's very unusual to have a flat APR. Usually you see APRs declining as loans get larger. This would be illegal in most states. Three, it creates an entirely new and untested chapter of law that's not subject, as we've been hearing, to Virginia's well-tested and frankly numerous other chapters of law, 15, 18, 22, for lending money. And four, I understand that a lot of folks, including maybe some of you, are concerned about what we've been talking about in terms of the open-end credit loophole, being able to make open-end credit without a license. So you may be thinking, well, at least this licenses those, but it does not. The license that is created here is merely optional. This bill does not touch Section 312, which is where open-end creditors look to today in order to make open-end credit without getting a license. This bill does not touch 312. It does not make a license mandatory, and therefore this does not close that
Okay,
loophole.
thank you very
Thank
much.
you.
Next, be brief.
Dana Wiggins with the Virginia Partnership to Encourage Responsible Lending. We oppose the bill because it leaves open the open-ended credit loophole, which is one of the biggest problems for consumers today, including from a lot of the online lenders that are represented here. Thank you.
Thank you, Dana. Next,
Kim Bobo, Virginia Interfaith Center. We oppose this bill.
okay.
Jay Spear, Virginia Poverty Law Center. We oppose the bill because it opens a new loophole.
Thank you, Jay. All right, you all want to wrap up?
Mr. Chair, responding to some of the math that's been calculated, I'm not sure if everyone's missing the minimum principal payment on line 285 at a $3,000 loan amount with a minimum principal payment of 5%. The longest this loan could be is 20 months. So if your first payment's due a month after you take it out, that's a 21-month term. So I'm not sure where we're coming up with 48 months or any of those other numbers or in perpetuity, but that's the maximum that the term could be.
Okay. All right. Bill, is this an amendment made to the substitute, or has it been amended? Has this been amended?
It
All right.
has.
The bill before us as amended, Senate Bill 855. Do I hear a motion?
Mr. Chairman, I'm going to move to report, and the reason is not, I don't know what the Attorney General's saying, but in fact, these guys.
Right to report and re-refer. Okay. It's got to go to
These-
finance.
Report and refer to finance. These guys are not regulated today. We need to regulate them, and the out-of-country guys are going to come in, and they are coming in. We need to have a regulated portion that we can actually go online and make loans. So it may not be perfect, but it seems to me that this puts some regulation in.
All right, the motion is to report and re-refer. All those in favor, vote aye. All those opposed, nay.
Ayes 7, noes 8.
Bill fails to report.
Thank the Chairman.
Let's,
Mr. Chairman,
was there any,
the wheels are gonna
can
ride.
you do it next week?
The ride.
All right.
The wheels, I need a ride, baby. Mr. Chairman, could I make an announcement?
Yes, go ahead.
To those who are here on all the energy bills, because of the time of the hour, they will be heard Thursday at 10 o'clock in this room.
Next week.
So all bills that deal with energy, they'll be heard this week.
All right.
This week, Thursday at 10 o'clock in this room.
All right. The committee will rise.